What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello. Happy Wednesday, ladies and gentlemen. Hope everyone's well. So FOMC tonight should be fun. We'll see. Can I explain everything about the FOMC? What do you mean explain everything? Do you mean you don't know what it is? Or do you mean what we can expect? Yeah, we can have a dive into FOMC shortly. As for a quick rundown, I'm currently in a short on pound New Zealand, which is running very, very nicely. This was more an expression on my short UK thesis. I made a YouTube video today actually covering my idea on the UK. So I went short on the 50% retracement of this bearish leg. Price pulled into the 61.8 and the 50% retracement, lined up previous structure, exactly what I'm always showing. So I executed a short on the daily rejection on this candle, and so far, so good. Can't complain, really. And I'm also long on the Nikkei. So I took this one on the H4 and actually running really well. So I added a small position in drawdown, and obviously I've got an initial position here. So I've got an average price sort of within this middle band right there, which is really nice. So again, moved to the upside, measured the low of this bullish leg to the high, pulled back into the fib zone. That's where we took our entry off the rejection right here. Unfortunately, it didn't work out straight away. So we saw price actually dip even lower towards the 200 moving average, then get swept up really nicely. And now I'm in profit, but the signal that this was sent in is now back to break even, which is pretty cool. Sluggy, hello. Bashi, hello. Shirls, good to see you all. Hope everyone is doing well today. I liquidated my SSLM position. So I didn't really do anything here. I actually got out pretty much break even, got out here. But I'm looking to get back in. So I'm going to reestablish a position in silver at some point. But I'm looking at gold right now. So we've had some news. I'm not sure exactly what the news was. So if anyone does know, let me know, because I've been not overly active today in terms of keeping up with the news and things. But I know something's happened. I'm not sure if it was Trump. The latest headline I've got was Trump cancels Iran strikes but keeps military threat. But I'm not sure if that is the newest one and what caused the bullish move or not. But anyway, with the optimism that we're clearly seeing, we've got stocks up, S&P's up, we've got gold up, we've got Nasdaq up. If we can continue to see this, gold is in a really nice position to actually continue higher potentially. So on the daily time frame, we're coming into this 200 moving average. We've come into a previous level of structure on the left. We're currently sat in the fib zone as well. So yeah, technically speaking, this is a very simple, very clean trade idea. We could go long, stop loss just below the low over here and just below the 200 moving average and look for something like this, the fib extension, which lines up with these previous all-time highs. So yeah, very simple, straightforward. I'm not going to execute this yet, but the idea is there at the moment. What do I think about Australian dollar, New Zealand? It's not my favorite trade right now, but we can have a look at that in a second. Pound dollar pulled back for a sell. It didn't pull back enough for me. So I was watching pound dollar. So I need to see it pull back into these previous lows, really. If we draw the fib from the high to the low, and actually, let me just make sure the settings are there. So at minimum, this would be, I mean, it's not even perfect, but sort of 50% retracement. The other thing to keep in mind, or the other thing I'm keeping in mind, is the fact that we broke below the 200 daily moving average, and we've now broken back above. So just based on moving averages and the way they work, this trend is actually still relatively intact to the upside. So there is that, but we've got the edge finder giving the US dollar a bullish reading, and it's giving pound dollar a bearish reading of -5. So there is maybe something like this that we could do. Stop loss could be a little bit tighter because obviously we're trading the daily time frame. It doesn't need to be at the fib high. And then a take profit potentially down at these daily lows, maybe over here, depending on how price action develops, so on and so on. But with that said, I suppose what we also should keep in mind are these higher lows that we're getting on the daily time frame. Let's make this black there. So we've got the low, higher low, higher high, obviously lower high over here. So we've got a pretty standard sort of uptrend going, again, with the moving averages in line. I'm just not super happy with this. I think the fundamentals support it, but of course, with a technical strategy, they both need to align. Looking at shorts on pound Swiss. Yeah, pound Swiss is still getting a bearish reading. It's still on, actually it's not, it's taken it off, but pound Swiss is definitely still on my list for potential shorts. Where's my thing? Oh, I must have gotten rid of it. Okay, hold on. Let me just draw it back. So this is basically what I'm looking at in pound Swiss. Every time we get to this 200, we get, every time we get to this trend line and sort of in line with the 200 moving average as well, we get this pretty sharp sell-off. Now, are we going to get a similar situation where we come back up and then reject, or are we just going to make a lower high and continue even lower? To be honest, it doesn't really matter. The idea really is just to go short. It's a very simple trade. There's not really much to talk about. We've got a massive monthly trend, weekly trend, daily trend that are bearish. Even the H4 trend overall is bearish as well. We've got the fundamentals that are bearish, obviously, with the edge finder. So it's more just a case of where do we actually want to get it in, not a case of is this trade a good idea? Because I would say it is a good idea, not financial advice. So in theory, if we could see this market close back below the 200 moving average on the H4, I think this might be a good position to go short, stop loss, potentially just up here, and then just let the trade run with a trailing stop. Now, the downside to this is it's an expensive trade to hold. Being short pound Swiss is not cheap with the swaps, so you've got to be fully aware of the cost that you're going to be in for. So with a trade like pound Swiss, if you're going to be sat in it and it's just sideways or even just in drawdown, that's costly. You don't want to sit in a sideways range on pound Swiss. You need to be in a trade that's making money. So yeah, again, something to be aware of. Crude, no. The crude oil inventories isn't enough to move markets, really. I don't actually think I've ever seen that news event or that headline move markets, other than oil markets, of course. But generally speaking, no. Currently in AUD CAD longs. I stopped out of AUD CAD, unfortunately. I took a position on Monday. Oh, this is frustrating. So where was my trade? So I went fib here, there. So yeah, this was the trade I took. I think I entered roughly around here. I can't remember exactly where my position was. And I think my stop was here. So I got stopped out. And then obviously we're having this recovery here, which is really frustrating, but it is what it is. It's okay. As for Aussie New Zealand, I'm still not really a fan of it. I wouldn't really want to be buying it at the current price. I just think it's too elevated. So weekly time frame is extremely extended. The monthly time frame is extended. I mean, look at this RSI screaming overbought, just again on a technical basis. I don't think the fundamentals are really there anymore. I mean, the edge finder doesn't have it on the doesn't have a bullish reading for it, and the COT positioning has decreased slightly as well. So if we go over and have a look at COT history, in fact, I'm not sure if the edge finder will have it because I've been paying attention to which one was I using? Leveraged funds. I'm not sure which one the edge finder uses. Yeah, so the edge finder doesn't reflect actually what I was talking about, but still the net positioning on COT for the Australian dollar, it's stretched, and I don't really like the idea. I think it's fragile. So what I mean by that is it could continue higher. Absolutely. I think that is the most likely outcome, is it continues higher. But the higher and higher it goes, the more fragile, and the less it's going to take for it to start having some sort of mean reversion back towards, its weekly and monthly range. Sluggy, you caught the dip on Nikkei. Very nice. If we move lower, I'll buy more. Fair enough. I quite like that idea. That's pretty much what I did as well. I hate these markets, man. I'm going to sleep for a few months. Yeah, it's unfortunate. I got a pretty decent trade on the Dow this afternoon. But I also took a relatively large loss on one of my other private positions. So yeah, pretty flat day for me in terms of daily P&L. Nothing interesting really, unfortunately. Euro pound buys. Nah, I don't see it. Yeah, I mean, this doesn't look very healthy for buy positions, does it? So let's see. I don't think there's really anything to lean on here. I don't think there's any major central bank divergence or anything within there. We've got nothing on the edge finder to support a euro pound buy. So I'll be honest, this is a no-go. It's not even a consideration. There's just nothing here. Moving averages on the H4 are flat. The daily is also flat. There's no trend. So yeah, there's nothing I can do here, unfortunately. Okay, so what's going on here? Yields coming down today, long end and on the short end. We've got the dollar not doing too much today, actually, relatively sideways. I mean, for the past, well, basically all week, the dollar's not done anything. Yes, last week, obviously, the dollar did have quite significant strength. But I think the question now really is, can the dollar break above 100? This is a huge level of resistance. We've got previous highs, we've got previous lows, and we've also got a previous high over here. So if the dollar can breach this side, we can get the Fed more hawkish, and we can get the rate cuts either completely priced out or partially further priced out than they already are. I think we could get the dollar start heading towards 107. Actually, let's say 105 to 107 would be my bullish targets on the dollar. I think that's completely reasonable. Actually, let me just see what time I'm on till today. Oh, cool. Okay, we've got another 15 minutes. Cool. Okay, any chart requests, let me know, because I don't really have anything on my list. New Zealand Swiss, I'm not really interested in. Platinum, CAD yen, dollar Swiss, pound dollar. I would say dollar Swiss and pound dollar could be pretty good for each other in terms of just hedging off a bit of that dollar risk. So at least whether the dollar strengthens or weakens, likely you're going to be relatively okay. And then obviously just keep the runner. So dollar Swiss short, I'm not a huge fan of, to be honest. I mean, I think, actually, let's see, what's the weekly time frame? I mean, huge bearish trend. So you could argue that you're trading a weekly trend, a daily trend as well is quite bearish. H4, yeah, I don't know. I like it, but I also don't. So I like the technicals here, but what I don't like is that we didn't manage to hit back into this resistance. I don't like that the H4 is flipped bullish as well in the moving averages, but again, I like the monthly, weekly, and daily trends. So you'd have to sort of figure that out by yourself, because I don't have anything really to give you on that one. As for pound dollar, I think we already spoke about that, but if we can get slightly higher into this previous level of support, I will happily go short. Ideally, we come a little bit higher into this 50% retracement. I think that would be the sweet spot. And then, yeah, we look for plays to go lower. Glenview, I've not seen you in a while. Hope you're okay. VWAP levels on ES. Sure. When it loads, hold on. Euro Aussie shorts. I'll be honest, I think pound Aussie shorts are a little bit of a better call than Euro Aussie. Let me just reopen this. So these are the ES VWAPs for today, and pivot points as well. So yeah, pound Aussie and Euro Aussie, which one? I would argue pound Aussie, mainly because Euro Aussie isn't on the edge finder. I also have a grievance with the UK. So that's my argument. The setup here looks nice as well. We came up, rejected the 200 moving average, and we're continuing to head lower. Now, I did make a video yesterday talking about the Australian dollar and how I'm a little bit concerned. It's basically everything I've been talking about on these streams for the past couple of weeks. But I do think there is still room to continue lower. But if we look on the weekly time frame, what's a little bit worrying is just this support level that we've come into on the weekly, showing a sharp rejection of. Can we continue higher from here and then continue lower back into, where's my box here? Potentially back into these lows, which would be, let's say 1.74. I think this might be the idea. So either we continue lower, we look for the retest here and then a play into 1.74, or we end up coming a bit higher, having a bit of a mean reversion, letting people take some profits and let short sellers get back in, and then we play lower from there. So I do like it, but again, I just feel a little bit uncomfortable. This market's already had a huge rally to the downside, and it's just really not had much give back. You know, this was really the only move we've had that's been adverse or a pullback, whatever you want to call it. Glenn, you're still in the Elite Traders Discord, keeping on subscription. I love that. Thank you for the money. I can go and buy a coffee. Can I please read out the VWAP levels? I'm not going to read out the VWAP levels because I don't have them here, but there you go. These are the levels. You missed the banter? Start talking again then, Glenn. Simple solution. Okay. Right. Let's move on. Like I said, I like pound Aussie. It's definitely there, but is it ready to go short? Very possibly, but it's a tricky one. Okay, let's move on to FOMC. So actually, I need to check what it actually is. Just hold on. I'm not sure what type of FOMC we've got. I don't think I think it's minutes. Let me just double check before I start yapping. Yeah, so we've got FOMC minutes. Okay. So it's going to be relatively boring, I would imagine. FOMC minutes very rarely is any interest, in my opinion. It's normally quite boring. So first of all, let's keep it simple and go to the economic heat maps. Look at EU yields. Why? Oh yeah. Well, there you go. Fixed. There you go. I fixed the European yields, or the German yields at least. Okay, so US, it's looking bleak. It's looking very bleak, actually. I didn't expect this much red. So GDP, surprise has been negative. What we've got, manufacturing is down, services PMI is down, retail sales flat. Of course, this is surprise, so I'm not talking about the actual data. I'm talking about the surprise, so it's actual relative to forecast. Inflation has been picking up. So what do we expect? So ladies and gentlemen, let me ask you a very quick trading question. If we've got growth that's been underperforming and we've got inflation that's been going higher, what can we start looking for potentially? I'll give you guys a couple of seconds to answer that because I want to see who knows. I mean, it's very simple. This isn't a trick question. Nick's spoken about it a lot. Trump in the US. Wait. Oh, the US is in final stage of talks with Iran. That's it. Yeah, that was the headline, I suppose. Anyway, so we've got growth. I can't remember what I was talking about. So we'll start again. We got growth that's been sort of underperforming. Manufacturing and services not doing well at all. We've got inflation that's been coming higher pretty consistently. So we've got PCE year on year that's actually relatively flat. We've got PPI that's done quite a large jump to 6% from 4.9, which was forecast, and 4.3 was previous. CPI has also been coming higher at 3.8. So inflation higher. Let's take now a look at the economic data. So let's first have a look at GDP growth for the US, and we're trying to dissect here what we can expect from FOMC, or not necessarily today, but in terms of what is the US economy doing, or what can we classify it as? Yeah, Bashi, you don't need to laugh at me. I stutter quite a lot because I think my brain moves really fast and sometimes I just can't get the words out. and then my brain moves too fast and I forget what I was actually trying to talk about. So it happens, you know. It's just because I'm so highly intelligent. My thoughts are like a million a minute. Anyway, okay, let's get serious. So GDP did very well initially over here, 4.3, 4.4. Since then, taken rather large hit, really underperforming the forecast as well. So growth not looking too hot. We're going to keep it relatively simple, by the way. I don't have the time to do a massive deep dive, but GDP not looking fantastic. Services. Hold on, my internet's not great. We'll have to skip services. Okay, manufacturing, not too bad. So 52.6, 52.4, 52.7, 52.7. So manufacturing hasn't been awful. However, services has been ticking to the downside. We are still above 50 on both of them, which is still within expansionary territory. So it's, again, not the worst thing, even though it has been coming to the downside. But it could be, again, one of those little things to keep in mind. So 56.1 down to 54, down to 53.6. So things aren't looking amazing, really, when it comes to the economic growth data. CPI, I mean, we've already just looked, CPI's jumped to the upside. So inflation's up, PPI is also up, PCE is also, well, actually PCE was relatively flat, I think. Yeah, PCE is relatively flat. And then the final, well, kind of the final pillar for the US is labor, which hasn't been doing great either. So we had negative 92, then a really nice one at 178, then it came down to 115. So if labor is, you know, not doing anything impressive, we've got inflation that's coming up, and we've got growth that looks, again, relatively unimpressive. What can the Fed do? Because they could end up in a position where they're hiking rates and disregarding growth and labor to tackle inflation, or they could take the opposite, where they cut rates to help labor and growth and disregard inflation. Either way, I don't really think it's a great call. So I think, and this is a big I think, let me underline this, I think the Fed's best approach is to take a more neutral to slightly hawkish stance, because I don't think growth and labor are bad enough to warrant cuts or anything. I do, however, think inflation is more of a problem at the moment than labor and growth. Does that make sense? That was a lot of words. So hopefully I managed to verbalize that and it all made sense. But there you go. So in that case, if we do get the Fed taking a more hawkish tilt, I think it's reasonable to expect the dollar to start trending higher. I think it would take quite a lot for this level to break at 100, because it's a big psychological level. We've been here for over a year. In fact, has it been over a year? May? Yeah, almost. Around about a year, we've not done anything on the dollar. So it's not a case of, oh, we've got a good data print or whatever it may be, and the dollar's going to fly. We need to see something solid. So I think a hawkish Fed, higher inflation prints consistently could be the leading factor for something like that. But of course, we'll have to see. Stagflation, case of that, I think, was the question I was asking, but I completely forgot I asked that question. So I appreciate you replying. I'm the same, James. It's okay. Yeah, I think it happens, because the problem is when you're streaming, it's either a case of you talk too much, or I feel like I talk too much and I'm just yapping, or it's a case of I'm not talking enough and it's boring. So it's trying to meet that middle ground. So I'd rather talk too much and too quick than not talk at all, or talk too slowly and people get bored. So bearing in mind, you know, I've got to keep people entertained for the rest of the stream so people don't click off and not come back. Crypto 675, hello. Okay, so I don't think there's really anything else to discuss. I think we've kind of quick fired a bit too quickly, and now I'm kind of not left with that much. So we've got Alan coming to take over the show in about 5 minutes. Until then, what do you guys want to look at? Pound New Zealand's getting a bearish reading. I forgot to mention that, I think, when I showed my position here. So my plan really for Pound New Zealand is very simple. I'm just going to capitalize on my economy crumbling. So I don't really want to take profits here. If I can, obviously this is a big if, I might get stopped out with a trailing stop, or it might reverse, anything could happen. But in an ideal world, I'm just going to hold this trade into the ground. And then I'm also looking for other shorts on the pound, such as the pound dollar. So I think it's, again, a very simple game plan. There are some major issues in the UK, which, again, I've already spoken about, which I'm not going to go into today. I did put a video out on my channel. So again, if anyone wants to watch that, you can feel free to go over there. I think my channel was dropped in the chat. And then gold. I really think gold is it's in a position now where it could be an amazing trade or a very quick stop out. So the problem is, if we've got Trump saying they're very close to a deal, or whatever the headline was exactly, I can't remember off the top of my head. If we get that, we could see gold continue to fly. We're going to see very little resistance against gold's upside, unless obviously we get, really hawkish Fed or whatever it may be. But just based on the geopolitical side, I think it's a great environment for gold to continue higher if we do get that, complete de-escalation or ceasefire. But then if we do attack Trump, and it's a case of, oh wait, Trump was, just yapping, then it's a case of very likely gold's going to continue lower, at least until this 200 daily moving average. And then we could maybe sort of double bottom around this level. When I say double bottom, I mean reject once and reject twice type of idea, but we'll see. If war ends, where does DXY go, as it was so weak pre-war and now strong because of hikes? Well, Bashi, let's think about it. If we've got the Fed, let's bring it back. We've got the Strait of Hormuz closed, oil supply disrupted, energy prices go higher, leading to higher inflation. So higher inflation, hawkish Fed. But if we get the Strait of Hormuz open up again, we get oil start flowing. Bear in mind, oil's not going to just magically appear. It's going to take a while for that supply chain to completely fix. But in that case, we could expect inflation lower as oil supply normalizes. So the Fed might not have to take as much of a hawkish approach as what we are currently thinking, Bashi. So I think if we did see that with the Strait of Hormuz completely reopen and we saw a complete de-escalation and ceasefire, or whatever you want to call it, I actually think the dollar has a case to be quite weak because, again, inflation will come down likely. Yields will eventually come down. The Fed will really not have much of a reason to be hiking. Again, that was very simplified, but I think that's sort of base case in that scenario. Sorry, I'm late. Why is dollar selling? Because we're losing a little bit of the war premium. And as I just said, sort of inflation, I guess, expectations might be getting priced out just a little smidge because we had, we had Trump have some de-escalation things. I think they said they were a day away or whatever it was. Bashi put it in the chat earlier. I can't remember what it was. So back to pre-war DXY weakness. Potentially, yes, Bashi. I actually made an interesting video today. I did some deep dive into, do you guys know how the UFO files been released in the US? Did a deep dive into how UFOs would affect the financial markets. So I've got that video coming out next week. So I'm not going to ruin it for you because I thought it was a really cool idea. It's a very unique YouTube video. I don't think you've ever seen anyone do a video like that before. So, when you start seeing all these big YouTubers saying UFOs and financial markets, just know I started that trend. But yeah, that's coming out next week, which should be cool. Anyway, I don't think there's anything. I think I keep saying that, but yeah, I think my main watch really would be pound dollar, and also maybe pound Australian. The problem is, what I don't like is the rejection here on this 50 moving average, because what we often see when we're seeing trends change, especially on sort of the H4 with this price action, we often see the test of the 200 moving average pull back towards the 50, bounce off the 50, and then we start establishing an uptrend and creating higher highs from here. And that's when we see these moving averages start to cross. So there is a little bit of a concern there for me on the technical side. I think fundamentally it's still a very good trade. But yeah, I'm just a little bit cautious that I might be a bit too late selling at this point. Pound dollar seems fantastic. S&P, I don't know. I don't like the S&P. Don't like the S&P. What happened to euro dollar? Actually, I have no idea. Let's just see what euro dollar is doing quickly. Yeah, Eurodollar's strengthened. I'm actually not sure what caused this move, to be honest. I would assume, actually, what am I saying? I do know what caused this move. I'm yapping. The dollar weakness caused this move. So, as we said, we had some de-escalation news from Trump, which weakens the dollar, strengthens euro. It's hand in hand. It's mechanical. Alan's here. Thank you, Alan. I appreciate the support on that. Anyway, ladies and gentlemen, I'm going to head off. We have the one and only, the great Alan Perez coming to take over the show. You're in fantastic hands with Alan. I would argue maybe even better hands than you're in with me, although questionable. Guys, have a good one. Enjoy the rest of your day. Stay safe. I'll see you all tomorrow. Thank you for being here.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, thank you for that beautiful handoff, James. I really appreciate it. But everyone, I would say go subscribe to James. He has a very interesting video coming out. I'm very excited for that UFO one, James. So you really piqued my interest there. Thank you so much, James. Hope you're having a great day and have a continued rest of your good day. And everyone else, hello, Sluggy, hey, Bashy, everyone, all the regulars. Good to see you guys here. So we are seeing a little bit of risk on today. Obviously, we have seen a development comment from the president of the United States. Now, don't know if this one's going to hold, right? We've seen this before, so this is not nothing new to us, but you are seeing a pretty significant market reaction. Type 1 into the chat if you do think that this statement is going to hold and there is a resolution, or if this is just one other one. So type 1 if this is going to hold, type 2 if this is just another regular comment that comes and goes. But let's go ahead and look at the market reaction here. Yields are lower across the board. So you're seeing in the US here, you're seeing the two-year yield, the short end of the curve, down almost 2%. You're seeing this across all of the US yields. Aussie yields down, Europe's down. So it's a pretty good story in that case. Oil is down. At one point it was down 6%, but it's still now below that 100 handle at 99.4. So very, very good to see that as well. And you're seeing some dollar softness as well. So right as we reach this level of resistance of 99.5. So we'll go ahead and see what happens. I have made the case that I am looking to be dollar bullish. But now that the landscape may be changing, I'll be a little bit more cautious on that front, right? If we have lower yields, lower inflation expectations, and if the Fed starts to react to this headline, or, if there is actually a end to the war and, the Fed reacts to, okay, now we're okay to perhaps maybe look past this, right, and start easing or just be very ready to go ahead and start easing, right? That's going to impact the dollar. So I'm going to go ahead and stay away from this for now. I have mentioned yesterday and earlier in the week as well that I'm waiting for either a break and retest above for the dollar index or a pullback into one of these key moving averages for some support in the dollar and then ultimately trading it higher. So we'll see how that plays out. Again, looking at the chat here, I'm seeing a lot of twos here. So it seems like this is just one other headline. It'll come and go. So we'll go ahead and see what happens there. So seems like the market right now is taking it in a good way, but again, it tends to do that. So we'll go ahead and see what happens at the end of this week. We also do have the Fed meeting minutes as well. So I'm curious to see how the Fed is divided, if they are, how they are, planning to tackle this, right? That'll give us some good insight, some good forward guidance there. So we'll go ahead and see how that happens. But for now, we are seeing some risk on. So as far as my open positions go, we do have the Australian dollar. In fact, let me just show this real quick here. Currency strength index, we do have risk on here on top today with the Aussie and Kiwi at the very top. And then for the losers, we have the Canadian dollar, the US dollar, and everyone else pretty much in the middle there. So we are seeing the Aussie dollar at one point up almost 1% on the day. As far as my positions go, I'm still into these positions. So they were at break even yesterday, but now we are finding some support. Coincidentally, right there with that 20-day moving average that's acting as dynamic support. So I still like this, right? So Aussie CAD, I'm still long. Aussie Swiss, I'm still long. Aussie Kiwi, I'm still long. Things are looking pretty well on that front, so I'm going to continue to hold those, especially if we do see some kind of a resolution and some risk on. So I'm going to continue with that. As far as my other ones that I want to look at, I didn't trade dollar CAD. I am looking to trade it, so ignore this one right here, but I am waiting for an edge finder confirmation, and it seems like we are getting close to that as of now. USD CAD is getting a neutral rating of +4, so we'll go ahead and see how that happens, how that develops there. But we are at the 20-day moving average, so we'll go ahead and see. Now that we're getting some softness there in the dollar, I'm actually hopeful that I can get a better entry than I would have thought. So if I put a Fibonacci from low to high, let me go ahead and see where we are standing here. So give me 1 second here. I just had it. Okay, cool. So if I zoom in here, okay, so maybe I can stomach a pullback into here at the 38.2% retracement level, and that'll improve my risk reward and it'll give me a better price. So we'll see how that happens. But nonetheless, I am still open to buy right here if the edge finder does flip bullish. So I'm going to ignore this right here. I'm going to put an alert right here in case we do get here. Then I will go ahead and buy. But for now, I'm going to let the dollar do its thing. I'm going to let it get softer if it continues to do so, because if this headline does stick, then I'm expecting some softness in the dollar. And then, of course, I'll just get a better price in dollar CAD. But I do like this trade nonetheless to the upside. Let's go ahead and look at the chat here. Alan, I follow what Iran says, the ball's in their country, so I don't watch what the USA says. I think they both have equal leverage, I would say. Yeah, just personal thing, I guess. Trump is the best 180 reverse, man, doesn't walk straight but in the circles. Yeah, it seems like the market's very sensitive to headlines, and the world is in pain. We saw this with bond yields. Bonds were selling off, yields were going high, and so the world is definitely under pressure, right? So I would say that there's a lot of incentive to go ahead and end the war. I think it's just a matter of them having a narrative that they can push to each of their respective countries to kind of justify pulling out of the war. But that's just my personal opinion. Hello, Kier. Hope you're doing good, man. Yeah, let's talk about gold. Gold's a very, very, big tradable, popular asset here in the community. So I would say around the whole retail trading community. So let's go ahead and talk about gold here. There is a potential setup to be done. So I was going to make a video on this today, actually a short form, but essentially the kryptonite to gold, right, as of this environment was higher yields, right, inflationary pressures, stronger dollar, a lot of stuff, right, going against gold. And we've actually been finding our way grinding lower to the 4,400 handle. Now, we are getting pretty close to it. Now, today we are up 1.2% on the day. But I do think that if you were to find your way somewhere within this level, I think it's a good risk to reward opportunity. If you take defined risk to go long gold, I think it's a pretty good outcome. In fact, I think Edge Finder is getting up there, so it's still a neutral reading. So I would wait for that to be bullish, of course. However, I think this is pretty good. This is a good level of support, and let me justify what I'm saying here. So at one point, this was resistance once, twice here. We broke up above, retrace into this level, and then from there on we continued our monstrous rally, right? And then you had a big drop in gold. You found some support at this level again, you rallied up, and then we had another big drop in gold. You actually tested this 200-day moving average to the T there, and then continued up higher. You found support within this level. So I do think that 4,400 to 4,200 is a solid level of support. So if you were to find your way into this level, I think if you take a responsible position, put your stop below maybe the recent low or just below this level, in general, and then you target maybe 5K, 5.3K, I think that's a pretty good play. But for now, again, the headline is fresh, so it may be walked back. You never know. So I would wait for that. I would wait for resolution in the Middle East, and I would wait for yields to come down lower. And then you have a really good story for gold. It would be, relative to recent price action, it would be at a discount. And then you also have, this key moving average as support as well. So that's kind of my thought process with gold. Let me know if you guys agree or not. But yeah, that's kind of my idea there. Oil still above 100. Yeah, so oil is it's at 99 point something, right? So it's still above there. Markets are still unsure. Again, we would need to see maybe some verbal confirmation or some kind of communication from the other side, right? So from my understanding, this is just a one-sided comment from Trump. I haven't seen anything come out from Iran to confirm or deny this claim. So we'll see what happens there. I do know that he had a deadline of like 2 to 3 days or maybe a week. Correct me if I'm wrong there, guys, but I think there was some sort of deadline to attach to this week. I was talking to James about this. What happens to DXY after the war? Oh yeah, what happens to DXY after the war? Well, I would say that it softens, right? That's kind of like the first thing that comes to mind is that the dollar index does get a little bit weaker. For one, there's a lot of safe haven appetite priced into the dollar, right? That safe haven strength. So I would assume some of that gets priced out. Nick mentioned this yesterday on the stream, but right now, as of now, the DXY has a 75 to 80% correlation to the 10-year yield. So what I would assume happens is as you get a resolution in the Middle East, yields start to drop a little bit. And so because of that high correlation to yields, the dollar would probably drop as well, right? So I would see maybe some support, maybe at the $98 handle would be probable. But then from there, we would need to see what happens even further, right? So I don't expect a complete drop to back to 96 per se, right? Because you still have rate differentials to consider, right? Whether you're comparing the dollar versus the euro, the dollar versus the CAD, the dollar versus the Aussie, right? So you still have to think in relative terms to where the dollar stands. But I do think that there's going to be probably an immediate drop to maybe $98 on the DXY, and then from there we would need to see what happens, right? We have to see at what the macros looking like for the U.S., how quickly the Fed is to shift, right? Because now you have Warsh, right? Which Warsh is taking a more proactive approach rather than a reactive approach when it comes to rates, right? So he wants to be looking at forward-looking data, maybe be ahead of the move or ahead of the curve when making decisions. So that's another thing to consider, and we'll get some more data or some more insight when he has his first speech and stuff like that. So that's kind of my thought process there, Bashi, on the dollar. Okay, so Slay has the same idea there on gold. Pound Swiss shorts. Any thought, Alliance, on 50% retracement level? So let's go ahead and look at Pound Swiss. So pound's getting a little bit of a lift today, obviously because of the good news that we're seeing over there in the Middle East. Let's look at the edge finder first. I'm gonna refresh this one here. Pound Swiss, where are you? Getting a bear stream. Actually, the pound basket seems to be under pressure here. You're seeing pound Swiss -7, pound Aussie, pound yen, pound Kiwi. Okay, so that's actually pretty solid, I would say. Let's see, you're at the 50% fib, so I would assume you're measuring out this move here. Yeah, you're pretty much at the 50 and 60. We already tapped the 61.8 as of today. What I would look at this, let me just remove all of these drawings. These are super old. Okay, let's see. Pound Swiss. Where does my eye take me? There. Support would be around here ish. Okay. Support. Okay, so we are now, okay, so we measure the move out. You are within 50% of this move here. I would wait for a little bit of a push up. Let me explain myself here. This is the level that I've defined. Now, technicals are very subjective to the individual, right? So I like to think in zones when trading Forex. So this is, to me, this is support, this is resistance, supply and demand, whatever you want to call it. These are my zones that I have identified. We are within 50% of the fib level. However, you are still in the middle of the zone. So it's a little bit tricky, right? I would rather short at some kind of a premium. So whether it be this 200-day moving average or even just a little bit more further up here at 1.067, I would kind of wait for that to go ahead and go short. Of course, if the edge finder is still showing that bearish reading, that will make a lot of sense. That's what I like. Also, too, right? Let's think about what's going on today. You are seeing some dollar softness, and because of that, you're seeing the pound, right? So if you continue to see the price action of today, which is soft dollar and stronger everything else, then I do think that you could have a chance where you actually can get a little bit of more of a bump there in pound Swiss, and then you get a better price. So it's up to you, right? Depending on your rules, of course, trade it however you want to. Let's say you want to trade it right now, then I would say open a half position here and then be open to putting another half position up here. That's another way you can go about it, right? If you still want to get like a filler position in there. Me personally, I think that If this headline does stick and there's confirmation from Iran, or there's just the intent to go ahead and end the war, then pound Swiss continues higher, or the pound in general gets a boost, and then you can trade at a better price there. So that's kind of my thoughts on pound Swiss. Hope that helps for you, man. Pound looking bad at the moment. Yeah, I can agree. There's a lot of things going on with the pound, from a fundamental perspective, and also to just the political landscape over there. Definitely is not good for the currency. But one thing I would say, guys, thank you for that recommendation. Pound Swiss is something that I'm going to consider myself. And thank you to the Edge Finder, guys. So go ahead and get yourself a copy of the tool. It is very, very good for your trading. It's going to help you out a lot. I definitely recommend it. It is something I use every single day in my trading. So I would highly recommend getting yourself a copy of the Edge Finder, and then join the Telegram channel, join the Discord, just be involved. Hey, Marco.
Oh, hello.
How are you, man?
Doing pretty well. How are you?
Pretty good. We getting some risk on today.
Yep, I think so. I guess the markets are reacting to some headlines that are coming out, but haven't they learned already that the headlines don't matter? I mean, like 90% of the headlines were fake. So for me personally, it's still the same opinion as yesterday. It's DXY up and equities brief correction, brief sell-off this week. What do you think?
I agree with you that it's just a headline. We've seen this over and over again. You say something, it gets walked back. You say something, gets walked back. From a selfish perspective, Marco, I'm hoping that this actually sticks, just because I'm long that Aussie basket. So my positions are actually doing quite well today.
Okay.
But I do agree with you that there is a good chance, or there's a strong probability, or history has told us that it's going to get walked back or something like that. I would look for, and I was telling you yesterday too. I don't even know what a resolution would look like at this point. Like what? Like, do you have an idea of what that would look like? Like, what would tell you, okay, this is actually real?
Yeah, not sure, because there has been so much talk that it's over and that the US has won and that Iran is going to come to the table. That I'm just not sure who would be the person to convey those news, because Trump would probably be spamming his Truth Social account, so you would get a massive amount of headlines. And yeah, I'm just not sure. But wasn't it a couple of days ago that Trump was thinking of like new attacks on Iran and escalating? So I mean, maybe this is a good time to get in on the risk off story. I'm sure there are traders out there that are fading these headlines, right? So they get a nice pop on equities to sell. Did you put on more risk on your Aussie positions, or are those the same positions from I think you had them a week or 2 weeks ago?
Yeah, it's the same ones from 2 weeks ago.
Okay.
They were at break even yesterday, actually. And I was like, I'm not, because if the trend continues, because we were seeing some pretty risk off moves. So I was like, if this continues, I don't want to add any risk on. So I'm just gonna keep it how it is. And I'm glad I did that. Well, not glad I did that, because obviously it's doing well today. But again, I still have to be aware of the risk. And again, like, this thing could get walked back any minute. So I'm pretty happy with where I'm at. I'm actually kind of happy that the dollar CAD is actually getting a little bit softer here today. I was telling the chat that either way, I do want to go ahead and jump into dollar CAD.
Okay.
If you do get that bullish reading on the Edge Finder, whether it be where price is right now or even more down here. So we'll see how the price action for the dollar continues. Like, if this move continues for the rest of the day, then maybe I can get a better position on dollar CAD. But still, one thing that I'm looking to add to my overall positions.
Yeah, I definitely like dollar CAD. So we had the inflation print yesterday. The inflation was lower than expected, and the overall story in Canada does seem to be troublesome. So selling the CAD is a pretty smart way to go. Personally, I was looking at, I think, Aussie CAD. Yeah, Aussie CAD, which is doing well today. But if I would have bought it at the 20 MA, I would probably already be stopped out. So for me, I'm waiting out this week to pass, and then sort of rethinking the situation. But dollar CAD, because of the rate hike story, could be pretty nice. Absolutely. So you're looking for like the 1.371 level, I'm guessing, something like that.
Let me see here. I had a 1.370. Yep.
Yep. And also, I think the confirmation that the conflict is over would be if a third party spots U.S. ships moving the area or moving out of the area. So not like Trump saying we're moving ships out, but actual third party sees the ships moving out and the U.S. leaving the sort of the area. What do you think?
Makes a lot of sense. I also do like the idea of not just third party confirming ships leaving, but third party confirming that there's positive talks. Like for example, Pakistan has been a mediator in all this, right? Like if they were to also
Yep.
come out and say
Yep.
Things are looking good, Iran says things are looking good, and the U.S. says things are looking good, then I think that that'll probably be a good hint at like, okay, maybe this is actually real.
Although they have been kind of unreliable. I think they actually put out a deal that was different to Iran and to the US. So basically, they made two versions of a deal, and then one version was given to the US, and the second version was given to Iran. It was right at
Oh,
the start
really?
when Pakistan got in as a mediator. Yeah.
Oh,
So I don't think we can rely much. And I think, and they have been in the conflict, not in the conflict, but as mediators for weeks now, and we haven't really saw anything positive come out of that. So that's why I don't really, I'm not really relying on Iran or on Pakistan to doing anything significant. And to be honest, I don't like that we have to even follow those headlines anymore, because I think it just spooks the market and it moves the markets away from the macro situation and the actual economic data and the numbers. So it's a bit tough. I think if once we go back to the regime of just the numbers, the Fed rate path, and the AI story, I think that's going to be more simple and a bit easier to trade as well.
yeah. I'm definitely not trading headlines at all anymore at this point. Maybe in the beginning, because there was I was essentially doing what I was doing with the tariff stuff, right? That was like a really good time for me. But this thing has dragged on and has been back and forth so much that I'm no longer even like trading off of that or whatever. Like I'm just trying to filter that out and then see like what macro setups make sense, even with the headlines, as a blanket over it.
Yep. I think the main question right now is, so inflation is high in the States. And if I just bring it up here to show to the viewers, if we go to the Edge Finder, and if we go to the economic data, so give me just 1 second.
I think it's at 3.8%. It took a complete U-turn. It's the highest since 2023.
The CPI, or?
Yeah, CPI.
Yeah, CPI 3.8. But the PPI is even more troublesome, 6%. And apparently PPI is a leading indicator for the CPI. So usually there is, I think, 1 or 2 month delay between the spike in the PPI and the spike in the CPI. So I think the main question now is the inflation coming from oil prices, or is it coming from something else? Because I actually read a little bit about it, and even the experts are not really sure, is the bulk of the inflation coming from the oil crisis. It could be something else, which means even once the conflict ends, we still may get high inflation and we still may get rate hikes in the future. So I think that's now the first thing that most experts want to basically deduce. Is the inflation just oil, or is it something else?
Yeah, I was looking at the I don't have it in front of me, but I was looking at like the breakdown of inflation, where it's coming from, and some of it's coming from clothes in the US, like clothes and stuff like that, which is hinting at the tariffs still. So that's kind of like my concern, is that the tariffs still haven't really passed through yet. And then now you have this, and like oil, right? When we think of oil and inflation, it's a leading indicator, it's a leading input, but the actual result of that is lagging. Like you're not going to see it, like you said, a month or two, right? So that's kind of my concern there. Like if this is still the back end of tariffs and then mixing in a little bit of oil inflation, what happens when you start to really see like the oil at peak, right? The peak oil prices, like what is that number going to look like?
Yeah, I mean, it's interesting. And you mentioned that you saw like an article that broke down all of the inputs into the rising inflation.
Yeah, it's like the breakdown. Let me see. Inflation breakdown.
Because I know during a situation like this, when there is a crisis, a lot of sellers, they increase the price just because they can. So just because they want to increase their profit margins, they increase the price, and then once the conflict is over, they never put it back to where it was. They did it in COVID, and some of them are probably doing it now with this crisis, even though they are not so much impacted by the rising price of oil. So that could be another sort of added effect that people are taking advantage of the situation. But
Yeah, like they could definitely be hedging or something like that. It makes
yeah.
sense.
And Alan, while you search, I'm just gonna mention, if you guys want to participate in the DNA funded giveaway, the procedure is this. So first, you need to get into the free A1 Discord. You need to fill out this form. I'm going to put it in the comment section. That's your first step. Once you're in the Discord, you need to go to the channel called giveaways, and you need to apply into another jot form, and then you'll get entered. It's going to be a 10K one phase account. So it was 5K. Now I have some 10K codes, which is twice as big. So that's pretty good. So you'll get entered into the wheel of names, and then we will pick a winner in like 15 to 20 minutes. So did you find it?
I saw the actual data set, like the numbers, right here. But I saw a chart that was like more visually appealing.
Okay.
You could actually see it better. But let me see. I'm gonna keep looking.
Yeah, the question is also what you mentioned, like the tariff stuff. Is that priced in, or does it have a delay? So that's definitely a question.
Let's see. I think this is not exactly what I saw, but this is similar. But a lot of the inflation or whatever was leading to energy, which makes a lot of sense, right, with the price of oil.
Yep.
But food and housing was a big one too. I see it here in this chart. Energy, shelter. Yeah, this is not a visually appealing chart, so I apologize. But essentially, you could see like the number sticking up here. Energy was a big one, right? In the fives there. And then you have apparel. Where's apparel? Right here. No, that doesn't make sense. It was okay. Apparel right here. It ticked up 0.6%. So a little bit hard chart to read for the viewers, possibly, especially like if you're on a phone or something like
food
that.
As well.
But
food has gone up. Food away from home, 0.7. And
so like on McDonald's and Chick-fil-A and all that stuff, right?
Okay.
It's getting more pricey.
Okay. Yeah. Interesting. I mean, Europe is definitely hit more by this crisis than the US, because you guys in the US, you basically rely on your own energy, while Europe is just getting crushed. So that makes sense that overseas the inflation is getting out of control as well.
Also, too, like a lot of products, whether you know about it or not, use petroleum. Like, for example, like in food, like your additives and stuff like that has a little bit of petroleum. You have also too in clothing, you have in makeup for women, right? Like some of it has oil in it, which is crazy. But like everything really has some sort of oil. So not only does it affect like transportation costs and everything like that, but it also trickles into mostly a lot of products that we use every single day.
Absolutely. And also Brazil is a huge producer of, I think, exporter of sugar, and sugar is made out of, I think it's ethanol or something like that. So basically they have plants where they can decide, do they want to produce sugar or do they want to produce energy? And depending on what's like in high demand, they're going to pick that. So it's thought that because of the current energy crisis, Brazil will focus on producing mostly energy, so there will be less sugar, so sugar price could explode up. And there's many different things that people are not even thinking about. A lot of food, a lot of crops, a lot of agro stuff that could go up in price in like 6 to 12 months. I know if you're interested in that, check out Campbell Ramble on, I think it's Substack. He basically does a full breakdown of all of the things that will probably go up in the next 6 to 12 months. And he also gives some trade ideas. I thought about actually buying sugar, but holding that position is pretty expensive. And do I really want to allocate capital to holding something for 6 to 12 months? I don't think so. So decided against that. And of course, the risk is if peace is reached in the next month or so, then of course your trade won't work. But it should stay near break even. It shouldn't like massively drop.
Got you. Maybe you can find like an ETF, because ETFs are usually lower cost.
Absolutely.
If you have something accessible like that, that would be worth looking at for sure.
Yeah, depending on my account, I think on my personal broker, I actually have an ETF of sugar I can do. And maybe, but on prop firms, I don't think so. On prop firms, basically, you need to hold a CFD or something like that, and the fees are pretty high. So it would be mostly like a long-term personal broker trade. But hey, if anyone in the audience can do it, definitely research it. And I think there's an edge behind it for sure.
Yeah, it makes sense. It makes sense. I didn't know that. I didn't know that sugar had derivatives of oil or petroleum.
I can send you an article. It's actually pretty interesting. It's a bunch of stuff. It's a bunch of agro stuff, like agriculture, that gets hit by this energy crisis.
So it's definitely a big pinpoint, and that's why I think it's in everyone's best interest that there's some kind of an end to the war. But I don't know if you saw the headline yesterday, Marco, but essentially Iran was basically like, we're willing to fight this off if there's military intervention, like even if it's a suicide mission. That's what makes me like kind of worried, or like, there's a chance that this thing just flops.
And what the US is betting on is basically they're doing the blockade, and they are forcing Iran to store oil. And you cannot store oil indefinitely. You basically have to close down the wells sooner or later. Well, Iran has been in this same position for, I think, 4 or 5 years in the last few decades. So they have developed techniques on how to close their wells, but reopen them in a few days or a few months, depending on the well. So that whole strategy may not work as good as the US expected. And also, Iran is still exporting oil through different pathways. I think 25 or 30% is still getting out of Iran to China
via like trains and like pipelines and stuff like that. Yeah,
I'm guessing so. And there's like a shadow fleet that can evade the US in some sort of a way. So yeah, the US cannot really catch every single ship,
Sure. Makes sense. Well, Marco, I'll go ahead and pivot out here, man, so you can do your DNA funded giveaway. It was a great talk as always. I'm curious to see what the meeting minutes are going to show. I guess I'll do one last question here. Do you think there's going to be some division between the meeting minutes, or you think that everyone will be pretty much in line? Because if there's division, then that's definitely going to instill some volatility today.
Yeah, that's a very interesting topic. And if you can stay for like 3 more minutes, we can talk about it. But basically, meeting minutes, I don't think we're going to get something big today. What I'm actually looking for is the speech from Waller that's coming this Friday. So if you go to Financial Juice, let me just bring it up here. If we go to Financial Juice and you go to the calendar here, we go to May 22nd, you have Fed Waller speaking. So he had a speech yesterday, which was basically a nothing burger. But on Friday, he should talk about his opinion on inflation and his opinion on the whole situation with the oil crisis. So if you get Waller flipping super hawkish, that's a telltale sign that maybe the whole committee is starting to flip more hawkish as well. So meeting minutes today, I don't think we will get much. But individual speeches from the Fed committee, especially the guys that are kind of in the middle, the guys that usually carry the vote, well, that's something that can really give us more insight. What do you think?
Yeah, I think it's going to be a hard sell, man. Like, it's hard to justify rate cuts when you have PPI at 6%, oil above 100, and then CPI is like going in the opposite direction. Like, I know that's Warsh's objective is to, try to satisfy Trump's request, but then also act responsibly. And I don't think actually he's going to be a super dovish person. Like, I think he's going to be very responsible, and I think that he's going to not make a reckless decision. That's my personal opinion there. So I think that even that, like, it's going to be a hard sell to convince someone or to convince the majority of the voters to start leaning more dovish. it's going to take some time. So I think that's going to disappoint the market. I think maybe the market's probably positioned that Warsh is going to find some way or some kind of approach to sell the idea that we can cut rates faster. I don't think that's going to be the case. I think, looking at his past, he was an inflation hawk, right? Previously when he was on the board. So it makes sense for him to do what he knows, right? And do a successful job at that.
Yeah, absolutely. And I think most of the guys that were campaigning for the position of the Fed chairman, they were fake pretending to be dovish. So, like, if you were campaigning for the position, you couldn't just be hawkish and say we need rate hikes because Trump would completely disregard you. But they were pretending to be dovish, and now that he's actually in, well, he can do what he wants at the end of the day. I don't think Trump can fire him anymore. So if he wants to hike, he can actually hike. It all depends on his relationship with Trump, and of course, it's a committee, so it's 12 people. Warsh is just one of them, so you need all 12 to come together.
Yeah, I think he'll probably prioritize, at least in the beginning, prioritize his relationship with the people at the board of the Fed, and gain their trust and do the right thing. So I do think that we have that going for us as far as Fed independence goes. But yeah, it's gonna be a super tough sell, man, to advocate for lower rates immediately.
Yeah, that would be pretty funny if it happens.
If it happens, man, yeah, it'll be crazy. But I hope not.
Yeah, I hope not either, because there's a reason why the Fed is a separate entity from the White House and the president.
Yeah. But all right, man, I'll go ahead and pivot out here for you.
Sure.
Good talk, man, and we'll talk tomorrow.
Yep, super interesting, and I'm looking forward to our live stream tomorrow. See you.
All right, man. Peace out.
So I want to repeat about the giveaway. If you want to participate in the DNA funded giveaway, here are the steps. So first, you need to join the A1 Discord. Okay, so it's free to join. I'm going to post the form right now. Okay, and then in the A1 trading Discord, you need to find a channel called giveaways. In that channel, you will actually find the jot form to enter the giveaway. Okay, fill it out and you'll get entered into a wheel of names. I'll pick a winner in 5 minutes. And if you're looking to get funded, we have a discount code for you, which is A1 Live. So A1 Live gets you 25% off any DNA funded challenge, right? A1 Live, 25% off any DNA funded challenge. I'm currently doing a challenge with them. This is a 25K 2-phase funded account. So I've passed phase 1, passed phase 2, now on to the funded stage, and I'm down $500. So let's see what happens. Have free trades open, and aiming, of course, to get a payout. But I've had a great experience so far. There's a big broker behind this company. They're using TradeLocker, which in my opinion is the best software for trade execution for us retail traders. And I've had some correspondence with their support team. Support team is pretty fast, knowledgeable, and polite as well. So definitely take a look. Watch list time. What do I have? Well, I have my gold position, which is running in a little bit of a drawdown, but I'm holding it. I think this is a nice bottom. And what I like about it is equities this week have been selling off, no doubt about it. Okay, Nasdaq is flying now, but before that, equities were selling off, right? See here, even the Russell, I think the Russell had a big drop. Yeah, the Russell had a pretty significant drop right there. The dollar was gaining a lot of value. If you go to the DXY, take a look. So the dollar was gaining a lot of value. But gold, and that is all bearish gold, but gold has been holding up okay. So it has been selling off, but not really that much. So I think this level is or should hold. I think there's a high probability that this level holds, and I'm happy to keep on holding my position. I think if we get even more of a risk-off theme, if equity sell off more, if the dollar gains more value, I think gold could hold in there. I think this could happen. And then finally, once you get the market to flip, we could get the move up that we are, of course, waiting for. Euro dollar, I'm still running a short. All of these trades were signals in the A1 Discord, by the way. So this one is running in profit. Personally, I think the dollar gains more value. I think this last news post that we had from the Middle East, I think it's probably a little bit of fake news. I'm not sure if anything will come out of that. And we have seen this playbook for, I don't know, 10 times already. So you get a news post from Trump, from Iran, markets rally, and then after a few days, nothing happens. The markets disregard the sort of the positive news, and then they finally sell off, continue with the move that was actually supposed to happen. So that's kind of how I'm seeing things. Now let's do the giveaway. So today is the 20th of May. 20th of May. Let's take a look. So let me get all of the entries. Okay, copy, wheel, paste, spin. So it's going to be a 10K one-phase account, which again is pretty nice. It's 2 times bigger than the previous accounts. Vatabi, if I'm pronouncing it correctly, congrats on being the winner. I have your contact information, and after my segment ends, I will send you the details or the code for a free 10K one-phase account. Okay, good luck. What I want to say, I wanted to finish the watch list. So gold running a position, euro dollar running a position. You can see that these trades are working against each other, but for both of these positions, my risk is 1%, but the upside is basically unlimited. The upside could be 1.5, could be 2, could be 2.5%. We'll see what happens. So even if I lose one of them, the other one should fly to some sort of a take profit, okay, to some sort of a net gain. So maybe I lose 1% on gold, but I win 1.5 or 2% on euro dollar. That's basically how I wanted to structure this position. And the best case scenario would be euro dollar drops, gold keeps on holding. So relative strength, gold keeps on holding like this, maybe sells off a little bit, and then eventually recovers and goes up. So that would be the best case scenario, that both positions produce a win, because the time frames are a bit different. On euro dollar, the time frame is like this week, basically. This week and maybe the next week. Gold, I would say the next 1 month, right? So this is a longer term horizon, longer term time frame. And I also have the Nikkei and I have the Nasdaq. Personally, this week, I don't want to get into equities. I think we sell off. I think it's risk off. I think we could get a better entry price if we remain a bit patient, right? So for the Nikkei, I think we could sell off a bit more. For the Nasdaq, we could definitely sell off a bit more. We could hit the 20 MA. What I would love to get as well is a confirmation from the edge finders. So top setups. Let's see, we have neutral, Nikkei. What about the NAS? Neutral, NAS. So I would love to get an extra confirmation there. The game plan, to sum it up, yes, I want to buy equities, but I want to wait this week and see what happens next week, right? I also want to see preferably a cheaper price on the NAS, a bit more of a correction, more of a pullback. Nikkei is fine, actually. The Nikkei, this level is okay. And then the last part would be a bullish bias, bullish reading on the top setups. That's what I personally need. Okay, that's about it for my watch list. Metals, let's see. I'm not really looking at silver, copper, or platinum. Bitcoin is moving with the risk on assets, so I'm not touching Bitcoin at the moment. I had a position, made a little bit of profit on it, but yeah, not looking to re-enter right now, especially not this week. comments. Let's see. I still have 2 more minutes, and then you have Tiger coming on. So let's find the last thing to analyze. Let's see. I'm not seeing much here. I can give you my opinion on the FOMC, so I can close out with that. Today, we're getting the meeting minutes. So it's not an FOMC meeting, it's just the meeting minutes as to what was discussed in the last meeting. Yes, this could be market moving. Most of the time, it's not. In the recent times, meeting minutes haven't moved the markets much. But this time, you may get a little bit more clarity. The thing that I'm personally focusing on, if you want to know the path of the Fed, if you want to know if they will hike or keep the rate the same, well, watch for individual speeches. The next one is Waller. So the next one, see, Fed Waller is speaking on May 22nd, 4 p.m. my time. Now I'm going to be closely watching that speech and seeing what Waller has to say. That's how the pros do it. They basically analyze every single committee member. They look at all of the speeches and they try to deduce, is that guy dovish? Is that guy hawkish? Or is he neutral? And then they plot all of them on a chart, and then they try to predict what the next rate path will be. That's how it's done, okay? Now, I'm not doing that because I'm not such a crazy analyst, but I try to do a little bit. So I try to see what Waller is thinking, for example, because he is one of the guys that usually tips the scale as to should we hike, should we keep the rate the same, or should we cut? Okay, now that's about it from me. Thank you very much for watching. I wish you good luck in the markets. You can catch me tomorrow and on Friday. I have more accounts for you, so I'm gonna do more giveaways. Right now, I think the story is still the same. Buy the dollar, wait for a bigger pullback on equities, and eventually buy the equities as well. Thank you. See you. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy hump day. Happy Wednesday. Hope you're all doing wonderful today. We do have Fed minutes coming out later. I'm sure Chris and Nick are on after me, so I'm sure they'll cuss and discuss that quite thorough. They're really awesome at that. I just love listening to those guys talk, especially back and forth. Two of the smartest dudes around, so definitely stay tuned for that after my segment is over with. Got a couple things on that note I figured I would chat about real quick. And first off, guys, at the very top of Financial Juice, we're getting this headline, that red banner saying that the U.S. is in final stages of talks with Iran. Poll report. I don't know what poll report means. I don't know if that means the pool or the gaggle of press reporters, what that means. But regardless, let's wait until we get some confirmations on that before we start jumping in and out of trades, especially with the Fed minutes coming out. Just wanted to disclaim that up front. Just be careful with this stuff because we have, and I know I mentioned this, I think the last day or two, we have gotten a lot of back and forth where a headline like this will come out only for it to get debunked 5 minutes later, 30 minutes later, 2 hours later, something like that. So anyway, as always, let me know if you have any specific tickers you'd like me to check out. Figure we'll take a look and see how this headline is for certain affecting some of the 30,000 foot assets. We can get us some currency pairs as well. But I just thought I would lead off with the FOMC minutes. So just a couple of notes I wrote down on that. If you guys remember when Jay Powell did give his last speech, his little farewell address last time, part of that included on the keeping the rates the same, that there was that high dissent vote. Remember, 8 voters had voted to keep it the same with 4 dissenting. And I do believe that was the highest dissension since, what was it, 1991 or something like that. So it had been a while since we'd had that big of a disparity. So it will be interesting to get some details on that, see if we get anything in those minutes, kind of clarifying their positions a little bit on that. Inflation views. Okay, it's going to be interesting to see whether they think this stuff is more transitory or feeding into the core inflation. Guys, on the note of inflation, one thing President Trump and the administration had been really touting the first part of the administration was the fact that we were getting some really good real wage growth. So that just basically meant that the wage growth was outpacing the CPI, the inflation. So as you guys remember, we popped over well over 3% in April and all the way up to 3.8% in May. Now, let's keep that 3.8% in mind, because when we flip down to the wage growth number for the most previous number, you're going to see it's less, 3.6%. So it's actually 0.2% in the negative when we're just looking at real wage growth. Now, remember, that's something President Trump and them were touting. I'm sure that they hate seeing those 2 digits like that out of balance. So guarantee you they're going to be thinking about that and sweating on that. So it's going to be interesting to see what comes of that. We'll see if they mention that a little bit further in the minutes as well. Because, yeah, that's definitely a little bit of a stain if you want to look at it that way on the administration. So, but again, that's partly what I'm interested to see about the meetings, the meeting minutes. Okay. See if they think this is transitory. One set of people that doesn't feel transitory is the bonds market, because if we look at our Fed Watch tool, guys, for the first time, we've had a price increase actually built into this year. So it's still pretty much at the 375 cap throughout all these next few meetings. But when you get to December, I was noticing for the first time, it really is outweighed by the rate hikes. So you had that 37.8 plus the 10 plus the 1. That's obviously going to be higher than the 49% rate, vote to keep it the same. So it's going to be interesting to see what they think. They feel like it's going to be stickier and around longer, higher for longer, as they say. So we got a couple like competing heads going against each other. So it's going to be interesting to see how this all plays out. But beyond that, again, this headline just came out just recently. So we'll take a look at a few assets. If you guys have any tickers, definitely throw them out there. I see US 30. Let's take a look. US 30 is the one I see so far. We'll just jump right onto that. Why not? So the indices pretty well been neutral. We pretty well had the big giant spikes. I think Nick or somebody called out the other day how it raised the 11th fastest or something, that it had raised from a decline, talking about the indices. I noticed it was, I believe, 11 sessions. So I don't know the exact terminology of that, but let's go find the indices real quick. Got this one here. Got the and you asked specifically for Dow 30. Dow 30 is kind of working a little different than the S&P and the Nasdaq lately, I've noticed. So just going to a daily chart. And of course, they've all had a really nice rebound ever since the war. The earlier parts of the war just completely pushed this thing down. So again, very fast retracement on not only the Dow, but look at the Nasdaq, the S&P. Okay, they've just had a remarkable rebound. But eventually, what goes up must come down. But as always, guys, we throw out these cliches. This thing can stay irrational longer than we can stay solvent. So just be careful about, trying to latch your wagon on at full price up here. This thing could get some types of retracement. So on that note, I kind of just preemptively drew up some, the former highs that we had just to see if we do get some drops at some point, how that could affect. Now, again, we just had a good headline. So need some confirmation, because if that's the case, this thing could continue to go even higher. But as always, not financial advice. That's just kind of what I see in the markets right now. Going back to the Dow, I have a couple zones drawn up here. I'm still keeping an eye on this demand zone down here at the 48,750 area, it looks like. This zone had previously broken through this kind of fair market value area here I was observing, and broke through those highs. So basically tested liquidity down, liquidity up. And I could definitely see if we could get some type of drop, which again, right now, probably not because of that headline, but if Iran comes out and debunks that headline, then hey, we could turn around and see a drop. And you know what a drop it would be: come down here, collect some unfilled orders, and potentially get a push up. Now, I don't think I would be interested in it though. Obviously, number one is because the Edge Finder does not have it on the list. Okay, it's still pretty well neutral as far as your combination of your fundamentals, your sentiment, and your technicals all rolled into one. So just be careful with that. I feel like I would want a little bit more of a discount. Now, on the Dow, I do have a daily and a 4-hour demand zone confluence all the way down here, starting at the 48.8 level, 46,850 level. That would be the daily. That would be the proximal line of the daily demand, and then the proximal line of the 4-hour would be right there at the 46,667. Added an extra 6 in there for you, but I feel like that would be a little bit more high probability because it's got multiple sets of eyeballs, some higher time frame eyeballs down here. So that's what I like. And not only that, just looking at the Dow, look at our volume spread analysis candle down here. We got a lot of trading activity that took place back here at the looks like April 7th, earlier part of April. So that to me says we must have had a pretty decent size of a pretty decent amount of good grief, I can't talk today. Institutional type trading activity. Okay, that's how zones typically turn strong, is when we get a leg out candle that flies up, breaks structures, and it does it on high volume. That's the picture I like. Oh, and to boot, we do have a former resistance support line, that blue dash line you see from kind of back in this area here. So I think if we could somehow get a big decline like that, I actually like that area better. I did draw up another zone out here that I liked because it kind of created itself out of just in the middle of nowhere. Again, guys, I don't like to trade zones when they have been created as a result of bouncing off of another zone. I just don't like that. Okay, I like zones that create themselves in cyberspace, out of thin air, however you want to, classify that. And that's what I think this zone is. I feel like it's just out on its own. Okay, we had a push up. We had a drop base rally out of that. So that's an area of interest, but it doesn't have a daily zone to kind of wrap around it to call it a confluence. So that's why I've drawn this one up a little deeper if we happen to get a drop down here. And oh, by the way, that deeper zone would probably, I'm just guessing, would probably be around the 61.8 from the swing low to the swing high. Okay, so 61.8 is just ahead of it. And that's what I like to see. I don't mind if my 61.8 is in the middle of the zone. I prefer it to be a little higher, though. Because if we get prices dropping to that area, there's going to be plenty of fib traders ready to tackle that. Now, when they tackle that and they get a little push up, they're going to start creating a little bit of liquidity on the underside from their stop losses. So I would like to see that happen and then drop down and sweep the stop losses under the 61.8. And oh, by the way, just so happen to jump into the zone of demand, the confluence for a better bite of the upside. So that's what I personally would be looking for in this situation. Even if right here it drops into the daily, I'd be okay with it. Because at the end of the day, I feel like that could be a pretty good beginning of a little bit of a sweep of liquidity underneath. So we'd be looking at these stop losses that get created here, which are going to be my red box. Liquidity right here, ladies and gents. Buyers are going to feel good about themselves when they see price start to rise. Maybe it bounces off the 50 level. Okay, who knows? The point is, create the liquidity inside of a zone of unfilled orders, and I think that could be a pretty good recipe as we get our spring candle. Okay, just going back to Wyckoff, get a little bit of a spring action downwards, and look for some buys at that point. So that's kind of the play I'd be looking at long term on Dow 30. And if you're very aggressive, then like I said, we got this other one a little bit higher up on the curve, but I don't like it because it's in the top third. Okay, it's basically buying in the premium zone. So just be careful about that. This would probably be a partial buy if I got all of my if I got everything to line up down here, got a bullish engulfing candle, break a structure of the upside, create a new upwards upwards gap, upwards impulse leg, breaking another structure. Okay, I could see that as a possible continuation. I just feel like it'd be a little more aggressive. So hopefully that helps you on Dow. See, we got platinum. Oh, wow. You'll have to remind me of the ticker on platinum because I don't trade it, but we could definitely chart it. What is it, like an XCU or something like that? XCU. Oh, let's see. XC. No, that's copper. XER? I can't remember the ticker. You have to remind me. Apologize for that. I just don't trade platinum, so I don't know the ticker off the top of my head. Platinum. XPT. That's right. All right. Learning this real time. See, I learn something every day, guys. 12 and a half years, and I'm just now learning the ticker for platinum. All right, let's take a look at XPT USD. Let's take a look at the daily on the right. My moving averages. So first of all, we have higher highs and higher lows. Unfortunately, the 21 EMA, which is the dark red, has actually dropped below the 8 EMA. Good grief, Tiger. The 8 EMA, which is the dark red, has dropped below the 21 EMA. So now it looks to me like the alligator's mouth is starting to open to the downside a little bit. So it's just, I'd be a little hesitant about that. When we look at when we kind of scale out, we see the higher highs and higher lows. But the question is, can this area over here give us some type of a zone of demand for a possible bounce? And over here on the 4-hour chart, I just don't like it. I don't really like this. I really need it to kind of organically just turn around if I'd be interested in buying. Maybe break this structure right here on a 4-hour chart at minimum so that this price action turns into more of an impulse leg to the upside. If it can do that, then maybe I could see a retracement to a newly created zone of demand somewhere in this area for a possible buy. But be careful with that because the EMAs are floating to the downside. Now, it's not the end-all, be-all. I just use those 8 and 21 EMAs more of like a mechanical way to confirm my trend. And unfortunately, it's just not matching up with the lower low or the higher highs and higher lows that we're experiencing. So, yeah, I don't really like this zone area over here. It might just have to organically start turning back around to the upside. So, yeah, so hopefully that helps. Yeah, you could really take it either way. Yeah, down to the downside for sure. Well, if you're looking for the downside play, I'd be wanting to break this structure then. That'd be my play. In other words, it's got some work to do whether we go long or short here. If it's going to the downside, for me, I want to see it break and close below that structure. And then we could look for a retracement to a newly created supply zone over here for a sell to the downside. So that's just a couple thoughts, a couple ideas. As always, guys, not financial advice, as Nick says. We're just showing you ideas and zones and structures and things that we're looking at. So that's the way I would want to do it. But at the end of the day, break this structure of the downside. That's really the key here. Break that, retrace to a newly created supply. Okay. So just for example's sake, new supply zone here for a short. And just for example's sake up here, new demand zone if we're trying to buy. If I can get it drawn there. Okay. And that'll be green, of course. So there's your two options right there. Again, I just need to see more details. Just need to see more information before making a trade on that. So hope that helps. Let's see. What else notes did I have? Yeah, no trades right now. Still in that pesky meta trade. Keeping an eye on NVIDIA too. We do have some NVIDIA earnings after hours for anybody that trades the Magnificent Sevens outside of currency land. Okay, if you're looking at stocks as well, that's coming up. I think NVIDIA on the stock box is given like a +5, +6, something like that. So it's got a little bit of bullishness from the financial readings and sentiment specifically. So definitely check that out if you are paying attention to the stocks. So anyway, outside of that, we did just have that post come out. So I'm interested to see just a couple things over here of what we got. What do we got? The VIX, and not really a whole lot of info on the VIX just yet. The dollar index, you can see we have started to see a drop probably from that post, okay? Again, the markets really want to see some good news. They do. That's why every time we get just a teaser or just a hint of positive positive news like this war might end, the ceasefire, and all that's going to be done, we get drops on the dollar. I imagine the 10 years the same. Yeah, drops on the 10 years. Okay, oil. Okay, oil going down. Again, these are just like knee-jerk reactions from the markets, in my opinion, without getting any confirmation. So we got to be careful with what we read in the news, regardless of the legacy outlet, regardless of the country. Okay. I kind of think I don't know what you guys think about this, but I feel like it's a good idea to get kind of a mix of both. Maybe get a little bit of legacy outlet just to see what the national media is talking about, but then find your favorite individual that's just creating it, out of their house, creating news material or creating headlines. Just kind of get a little bit of a balance, and that way because a lot of the people just doing it at home on their laptop, they don't necessarily always have an agenda. Some of them do, but the point is they're not getting paid by somebody to say what somebody else wants to say. So just getting a little bit of a balance out of that, I've found that it kind of gives a little more well-rounded look to it, rather than just dependent on CNN or Fox or whatever the case is. Just kind of finding a mix. So anyway, gold, silver is still pretty boring to me, guys. I just don't like it. They're not on the edge finder. They're about as neutral as it gets. I think we got a 0, a +1 on both of them, something like that. As far as Bitcoin goes, nothing really to report over there. I'm still keeping an eye on if we can somehow figure out a way to break this structure to the downside. If we get any positive fruition out of this headline today, then that's going to probably take my interest off of this bearish look that we have right now at Bitcoin. It's given us a -5. This may just be a short-lived a short-lived bias, in my opinion, especially if we get any positivity. But if somebody comes out and says, hell no, we're not doing that, then yeah, I could definitely continue to look and see if we can get a break of structure to the downside and then a retrace. Try to find a new zone of supply to short. So let me double check what you guys think. Yeah, Minaj, yeah, as far as the Bitcoin falling, yeah, if somebody comes out in 5 minutes and discredits what we just saw as far as this headline goes over here, then yeah, I could definitely see the Bitcoin continuing to drop. Bitcoin rides along with the indices a lot of the time, guys. It's a risk asset. So if we have money flowing to the US dollar because it's a safe haven, just as an example, then that money typically is coming out of stocks. It's typically coming out of Bitcoin, right? The risky assets. So right now, that's a risk on move or a risk on knee-jerk reaction from this headline we see up here. But if they discredit it, then yeah, I'm going to continue to see if we can't find this short. And as you can see on Bitcoin, just kind of finalize or finish my thought up here, I had already drawn, I'll just go to a one chart look. I already drew a supply zone here, but this is an incomplete picture. So I don't even know why I left that solid red. I need to leave it light red. The reason is because this supply zone has yet to break a structure to the downside. Okay. I just kind of drew that to see what happens if and when we, do return. I'm sure this headline might push it around, but even if you are bullish on Bitcoin, let's just say you have a reason to buy it right now. This is another reason I draw up these zones. I don't get that out of the way, is to just understand that these things can be landmines. If you're trying to buy, I would expect it probably bounce. I don't think it's strong enough to just completely take price all the way down. But if I had a reason to buy, I wouldn't want to buy until we broke through it and then retrace. Okay. That's this supply zone I'm talking about. That would be the play I would want to do if I had a reason to buy it right now, which I don't. But you got to look out for these landmines. Again, I trade the supply and demand zones, but even if you don't, this is part of the reason I always draw them up, is just so you guys can see what could potentially turn price around. Good example right now. I know we're not trading nat gas over here, but nat gas is a great example. This is a zone I drew up for one of my other projects, kind of showing this zone of supply here that pushed price down and broke some structures, kind of created a double bottom over here. The point is it broke a structure. So when I see a zone back in the previous times, in this case, March 12th, I want to look forward. I want to bring price forward and see where it's at. And that's exactly where we're getting a little bit of hesitation as we speak. Okay. Getting a little bit of bounce in. We actually had a pretty solid couple red candles on the downside. So just be careful about trying to buy. And it doesn't matter what asset you're looking at. if you get underneath these zones, or vice versa, if you're getting close to a demand zone and you're trying to go against it, just be careful, because you very easily could have this happen to you, where it feel good about yourself, it bounces up, but then the unfilled orders from the opposite zone start taking effect and manipulating and pushing your trade back down. So just be careful with that. Let's see, I've got about 6 minutes left. Volume indicator, you're looking for big volume candles in the base of a zone or in the leg out? At least the leg out, now StarX, but yeah, preferably both. As far as the volume spread analysis, yeah. See, I pull up my volume whenever I'm looking for stocks. I just leave it off most of the time, because even with stocks, even with everything else, I prefer the volume spread analysis, just because I want to see institutional activity. So yes, to answer your question, just looking down here on nat gas, just as an example, where I drew this daily zone, you can see I had a big red candle coming out, yellow candle and a big red candle. That's ultra high volume. Okay, we had another red candle up here where price was trying to go down, but it got slammed back up. Okay, and then eventually retraced, kept going. Partly because we had a former support that became resistance, over here, that became support right there on that wick, that became support again and flew up. So yes, to answer your question, I prefer to see it in both. And I don't like to see a whole lot of candles here either. Now, this is a daily, so that's why it's showing a lot of candles. But if I just go to a daily as an example, you can see I just got one candle. So you had over here in the past, you had price move up, clear up here at one point, and then you had a drop, and then a base, and then a rally. Now, the picture doesn't look the greatest on this chart, but again, when we go to 4 hour, you can see where the volume starts stepping in. So yeah, just to answer that, I have to see effort match result. If I don't see effort match result, all of my other parameters could be looking good in favor of that, Edge Finder, some of these other items. But if I don't see any volume, it could be construed as a false move or fake news. Should I buy gold on the news? Really, the question to that, or the answer to that, is just keep watching the streams, because we're at the end of the day, we're not here to just say go buy, go sell, go do this, go do that. We're just here to kind of show you some strategies so that you can make that decision yourself. We don't want to give you fish. We want to teach you how to fish. That makes sense. Because the question is, we have no idea yet. We got to see what the FOMC minutes look like. We also have Kevin Warsh getting sworn in on Friday. And especially right now, we've got this headline up here. It's just haunting over us, okay? So as soon as I finish my segment, that's the first thing I'm doing, is I'm going to go do some research and see how true that is. So yeah, just be careful with whatever you're doing right now until we get some settlement on this, until we see what we have coming out of the Fed minutes, which again, Nick and Chris will definitely be more in depth with, okay, than me. So just stay tuned. Maybe throw that same question out to them. They'll probably tell you the same thing, okay? We're not here to necessarily give signals, although the gents all on the team have their own little service, which is awesome. So I would recommend going following one of those guys, whether it's Nick, whether it's Marco, whether it's, any of the other guys, where they're actually going in and actually writing up signals, and they would be able to help you on that type of stuff a lot better than me. So, and getting lost in all this is Aussie's employment numbers, which comes out tonight. Let's see here, ladies and gents. Did I have anything else before I get up out of here? Just take a quick look at my, let's see. I had a few alerts hit of late. I had an Aussie Kiwi, which was on our bullish list, bounce into this zone of demand down here. Let's see, that happened. I think that happened when I was busy. 9 a.m. No. Yeah, I see. Here's the thing. Aussie Kiwi, I do believe, well, it's off the list now, but Aussie CAD, in fact, is the only bullish item. Wow, that's crazy. Well, in fact, I had one hit there too. Okay, Aussie CAD. So here's the Aussie CAD. So on both of these, actually, I had a bounce off both these zones of demand. But you know what, guys? At the end of the day, I get so busy, I miss a lot of these signals. So I got to figure out a way, as busy as I get, to stop missing these trades, because there you go. There's a nice bounce off Aussie CAD and Aussie Kiwi. That are just doing what it's supposed to do, doing what demand zones do. So that, as far as this is concerned, I would probably look at like a second chance play on this. If we can break this structure as an example on Aussie CAD, break a structure, get a retracement, and see if I can't find another newly created zone of demand somewhere down here for a second chance buy. Because that's the idea is, hey, are we getting the bounce from the zone? Number one, the higher time frame zones. If so, great. Step it down. Okay, here's a good example. Now, without doing too much detail on this, this would be an example of what I'm talking about. It's kind of created a new zone in place of it. And to answer your question earlier about volume, look at the leg out. See the VSA candle? It's like doubled in size. That's what I want to see. But then you have to look over ahead and to the left. Zone of supply. Just so happens that's where we got our rejection. And it just slammed all the way down to the bottom of the range of that candle. So see, you got to constantly be aware of, again, even if you don't trade these, be aware of these overhead zones or underneath zones. So if you're up in this area, you know not to buy when you have a zone over here that has pushed all the way down and broken structures. So I'll still keep an eye on this, maybe has a little bit of a second chance. And there's my alert. And I think Chris is up after me, guys. So that was a lot of everything. Stay tuned to Chris. Stay tuned to Nick. They'll go a lot more in depth about the FOMC minutes. I don't know why I can't say the word minutes today. And they'll help you out a lot more. Ask them about that question on gold, and they'll probably help you out and give you a similar answer, or maybe they can go a little more in depth. But again, guys, last thing I'll say, you got a lot of guys on our team that do these signals, pass out signals, not only just giving you levels, but giving you explanations and reasons why you might consider the trade. But there's always that disclaimer behind it. At the end of the day, do your own due diligence when making any buy or sell decisions. So with that, ladies and gents, I'm out of here. Take care. Have fun. Stay tuned with Chris and Nick coming up.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Wednesday. Welcome back. A little FOMC minutes today. Some jumpy price action. We've had a pretty quiet week as far as net gains, net losses. Monday, the market was within about 18 points of the open. Yesterday, the market was in about 16, 17 points of the open. Today, not the same story unless we end up settling back down towards 73.80 by the end of the day. Pretty aggressive jump. All I can see headline-wise is that, Trump's making some noise, final stages of the talk in Iran. They got to make a decision fast, blah, blah, blah. So anyway, biggest thing, honestly, is NVIDIA earnings. I'm sure you all know that. So NVIDIA earnings is today after market. Let's have a look. This is where the chart is at. This is a weekly. Let's go to the daily. We pulled back a little bit, but we are recentered right now. When I looked at this on Monday, it was sitting at 225. The brokers are expecting about a $13 move on NVIDIA. So let's price out this trade. I don't know if I love taking the trade because I think it's really all going to be about the price action come Thursday and Friday, whether or not this market really wants to try to use NVIDIA as a tool to go higher, or if it's just all the good stuff's been priced in. This is kind of the icing on the cake for good Q1 earnings. NVIDIA is the biggest company in the world market cap wise, and we see what the market actually does from the larger technical side, which I don't think anybody would be super surprised from a technical level. Okay, all of you out there trading Forex, all of you out there trading futures, if you see a chart that looks like this, are you super bullish on a chart like this? It's been nice to be bullish, yes. But from a technical standpoint, a pause, a pullback would make some sense. We have been in the distribution of gains. This has been one of the most outlierish moves since like the 1950s. So we've said that a lot this year. That's never happened before. That's the craziest thing that's happened since whatever, insert date. We're getting a lot of that. So options are as popular as ever. Flows are moving. Futures are ripping. And there's a lot of volatility intraday. Even yesterday, the market was down 0.5%, up 0.8%, down 0.55% to settle basically flat for the day. And we're getting a lot of noise. So same thing kind of today. I'm looking to see where prices are at. If you're looking at this screen, these black lines represent some trades that I have where I'm looking to make sure price stays below 74.30. Hopefully it does. And it stays above 7,300. Hopefully it does. If that's the case, I'll have a nice little profit on the day. I'm looking at some levels today, somewhere between 7,400 and 7,425 on the SPX to maybe see if price will settle here by the end of the day. If it does, I'll have a nice little winner there as well. I'm going to torture myself. I did this morning. I took a trade around the 7,400 zone. I closed out for, let me go, filled orders here. This trade was a small winner. I mean, yeah, all right. So the trade was like a 310 debit. Now it's trading for let's say 560. So about a $250 winner this morning. But I had to sit on it for a couple hours. There was a lot of volatility this morning. I mean, maybe you don't see it. Maybe you did. But I mean, look, the market was dropping here about 35 points, which was the entire expected move, by the way. And then off that low, the market rallied. Oh, no big deal. 79 points. The market was forecasted for about a 40 to 45 point move today, and it nearly doubled that. It is volatile. We are seeing some crazy stuff. So I do have a trade ready to go for Domino's Pizza today. I took one. I'll post that in Poll Alerts right now, actually. And then I do want to take a look. I'll nerd out a little bit and price out some earnings for you. And I'll look and see what the NVIDIA trade is. As far as, expectations, what the brokers have priced, is it a trade I could actually take within good reason? Okay, so let's go Domino's Pizza first. I'll bring it up here. So I got a pretty good fill on it. I was filled for $3.25 credit. It's a 92% chance of profit. I don't think we're going to drop on Domino's down to like 70% by the end of the year as far as the overall pullback and drawdown. So here's my overall structure. Even if this is in a channel and we go high, low, lower, high, lower, low, discounted cash flow fundamentals should be able to show some support around this 300 handle. I'm all the way down to a 220 by 210. So this is coming in for Poll Alerts. This will be in the stock options trade section. So let's go new trade for DPZ. All right, so that is a 220 by 210 ratio spread. I pulled in 325 credit. Probability profits 92%. I'm willing to own the shares, not for very long, but I'd own them and try to repair them and pull like a $500 to $1,000 profit. That is the game plan. If that gets filled, otherwise it's just going to be an income trade, and I'll pull the $325 or close to it. If I'm over like $275 or $300 profit before expiration, I'll probably just take the profit. So that is now in Poll Alerts officially under stocks options. I wanted to take a look at some Forex today as well. We've had a lot of noise with the intervention rumors and whatnot from the Bank of Japan. Let's go to NVIDIA. That's where all the movement's going to be happening after hours today. So here is what the broker says. Let's dive into the numbers. So NVIDIA from a broker platform. This is Tasty Trade. May 22nd is Friday's expiration. So by today to Friday, the broker's saying we're going to have about an $11.8 move. So 1180 on top of current price, 224.55. So about a high, I'm going to write this down. So 236.35 on the high and 224.55 minus 1180, 212.75 on the low, 212.75 on the low. Now, I'm going to build out a trade here really quickly, see if I can build out this trade here for NVIDIA. Because if I put on a calendar spread, it's kind of interesting how we can do this trade. Let me add in the option chain. I could go to the Friday expiration. We're trading right around 224.50. I could probably do the 225 strike. Let's have a look at this here. So if I do the 225 strike, 225 was centered this week. Either way, I'm trying to think where the premium is. I mean, an at the money, it's just because we're trading it really at 224. I'm just going to go closest to the money, which is 225. So if I sell a Friday call, and then I go out to Tuesday because of Memorial Day, and then I'll buy This trade is like a 40-cent. I mean, honestly, I think I'm going to take the trade just to get some skin in the game, see what happens. Maybe throw like, max risk $84. If NVIDIA stays inside of this range, this is going to be my trade. So if NVIDIA going into, so let's say into Thursday morning. So Thursday by opening bell. If I take the trade, NVIDIA's hanging out around 225 tomorrow. That 45-cent debit can be worth almost $100, give or take. That's a great win. Okay. Let me check my stats here on implied volatility. We have for the 22nd, 96.1 implied vol. So that's way up here, 96.1. That even makes it even better. Let's also look at the IV rank, 53.6. All right, I'm going to take this trade. I'll take the trade. So this is going to be the 22nd, sell the 225, and then the 26th, buy the 225. It's about a 43-cent debit. I'm going to go 2 contracts, just risking like $86 max risk, but it has the potential to pay me 100+%. So let's see. I mean, if I really nail this thing Thursday morning or Thursday end of day, this is what gets kind of exciting. If we're hanging out around 225 by Thursday end of the day, I can turn like a $40 debit into like a $160 to $180 winner. So if we go into Friday morning, it gets even more exciting, because if we're anywhere near, 220 to 225 or even 230 by opening bell on Friday, there is some pretty good profit opportunity just to see some range trading on NVIDIA. So again, for me, like the little risk of, $80, I think it's worth it. So I'll take this trade. Let's see if we can get out for like 45 cents debit. And I will send this trade filled for 45 cents. Okay, that trade is in. I'll put this in. This is short term. I usually don't take a lot of short term trades for pulver alerts, but this is kind of a make or break. When I get the trade in, I'm in for 45 cents. I'm going to look at managing the trade tomorrow morning. And if it's out, like if NVIDIA has like a $5 or $10 move up or down, I will probably sit on it until Friday, because it's one of those trades where NVIDIA is the largest company in the world market cap wise. And usually there's so much liquidity and volume in it that we don't necessarily see the market go haywire. And like, NVIDIA's up $20 and it runs $50 higher. It's like, if NVIDIA's up $10 tomorrow, it's probably going to fade $3, $4, $5 by Friday. Usually it's a pretty quiet earnings reaction on NVIDIA. So anyway, I will take a look at that. So that trade is in. So new trade, I'm getting this typed up. So I'm going 5/22 expiration, 225 sell call, and then 5/26 expiration, 225 buy call. Got filled for a 45 cents debit. Looking for NVIDIA to stay between about 220 to 230 by Thursday opening bell or end of day, or potentially Friday morning. I likely will not hang on to that trade all the way until Friday end of day. All right. So that's coming into stocks and options for pulver alerts as well. There we go. Oops. Okay. So new trade on NVIDIA. Again, short term, that trade's going to be managed within the next 24 to 48 hours. And we'll see if Domino's Pizza, that's out longer term, but should be pretty safe, $325 per contract. Okay. All right. So we'll keep an eye on that. Could be pretty exciting. Let's talk some other stuff. Let's go currencies. Okay. Aussie and this is Aussie New Zealand strong today. Dollar and CAD a week today. Everything else baseline. Let's have a look. So I'm going to go Aussie CAD. I am still, am I still long Aussie CAD? I think I got out. I'm looking at actually short Aussie CAD somewhere between, let me go back to the weekly. I don't think I'm going to short it at parity. I'd love to. I think it's still a decent trade. The better short for me is, let's see if Aussie CAD can hit like 105. If we hit 10, 104, 105, 106, I will be scaling into this Aussie CAD for a major short position. This has been a multi-year range of almost 22 years. So, I mean, it obviously could bounce off of parity here and still pull back a few hundred pips. Here is a daily look. I mean, this has been a pretty good trend with minimum. I mean, if you look at this swing, 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 I mean, it's supported, yes, but it's like, how much higher does this thing go? I mean, I'd much rather see like crazy overbought conditions, all-time highs, and then sell the living crap out of Aussie CAD. But right now, honestly, it's probably a lot like the, Aussie New Zealand, which is we just get a pullback. Let's say we pull back here, buy it, and we're trying to, revisit that parity number again, or maybe even get to all-time highs. So anyway, let me see what I'm doing on this one. All right, I'm just logging into my broker platform for currencies. There we go. So Aussie CAD. Let's go here. Yeah, I was looking at that short trade around, gosh, it was so close to hitting parity. 99.60, and we fell to about 97.50. That'd have been a fun little grab. Still up some profit on dollar Swiss, still up some profit on Aussie Swiss, still up some profit on New Zealand CAD. I am down a tiny bit on my Aussie New Zealand. I'm still long in Aussie New Zealand. This thing is broken structure a tiny bit. I wouldn't be overly excited about shorting Aussie New Zealand. I think some of you, I talked about this a couple weeks ago when I was on. Is this a really nice looking rising wedge? Yes. Have we broken any recent lows? No. But if and when we do break a low like this, we probably sell back off a little bit. I'm going to use that as an opportunity to dollar cost average and take this thing up to parity. 1.27 to 1.28 is my profit target. So I'm not interested in a little pullback here of maybe, it could be 100 pips, it could be 500 pips. I will be scooping up more Aussie New Zealand longs to take this thing up to symmetry at 127, 128. So I'm still going to stay long in this one, and I'll be patient. Let's go yen crosses or Aussie Swiss. Aussie Swiss. I had some chart alarms here. I saw that Nick, I believe, exited out his Aussie Swiss. I'm still hanging on to it. I'm going to be really stubborn. I've been in this trade for literally 2 years. I'm not giving up on this thing. This is going to be, to me, a fifth wave trade. So I'm looking at a wave 1, and then a pullback. Wave 3, and then a pullback. Wave 5, still coming. I'm going to be stubborn. So 1, 2, 3, 4, whatever that looks like, probably pausing, probably choppy, probably noisy, but 5, I want to be, 50, 850, 6,000 area. That to me is where I'm going to say, okay, I'll take some profit up here. So I'm going to hang in there a little bit longer. Okay, yen crosses. Who loves their yen crosses? Who's got 2 thumbs and loves the yen crosses? Not this guy. Anyway, here's the Aussie New Zealand, or the Aussie yen. Overbought conditions on the weekly time frame. Look at this freaking run, man. That is from Liberation Day 2025. Look at this Aussie yen. Crazy. Wow. That's almost 3,000 pips. I mean, technically speaking, it's overbought. Does structure break? I would watch it closely. If we have risk off in the markets, watch for the yen. Right? I mean, to what I'm reading, the Bank of Japan is possibly raising rates again in 2026, maybe by another 25 to 50 basis points. It looks like a lot of central banks are talking about raising rates. The U.S. is potentially raising rates, but it's only showing like a 25 basis points hike maybe in January 2027. So the whole world is seeing higher yields, and that's usually not a good sign. Like PMIs are up, yields are higher. It's putting a lot of pressure on borrowing. It's put a lot of pressure on growth. Yet the stock market's at all-time highs. So it's a really interesting like dichotomy of risk appetite versus headwinds versus what are central banks going to do? Are the central banks going to take the punch bowl away because of higher inflation? I don't know. And that's a big what if. So I'm not going to trade Japanese yen like speculating on, oh, it's a good technical setup. I mean, it is. When I see overbought conditions and divergence on a weekly, it's a great setup, but I have to have an exit plan. Look at all this. We have 1, 2, 3, 4, 5, 6 weeks of indecision on top of taking in an intervention, right? That was that big intervention move. That's probably a 200 to 300 pip candle, if not more. That high to low candle all by itself is a 350 pip candle. And yet on the weekly, it's like just a bunch of noise. So anyway, if structure breaks, sure, it has room to fall like 109, 110 to be safe at a round number. We're trading around 113 and change. There's some wiggle room there. But if the overall trend doesn't really break or doesn't have this major topping pattern, I still don't feel comfortable, taking yen strength. Aussie dollar, my longs are out. I'm not in anything Aussie dollar. CAD Swiss, I'm patience, I believe, is the key operative word here. But it has extended my patience longer than I wanted. So I'm still looking to see if we just spend some time holding these bottoms going over on the right-hand side of the trend line. If this thing can put in maybe a beautiful bottoming pattern, I'll start looking for a 3 to 5 wave move. That would be an excellent trade for me to hold and get the heck out of this thing for some nice profit. It's been a while, but I'm still going to hang on to it. There is some positive swap in this. That's not really exciting when, I'm down maybe 300 to 400 pips in a drawdown, and yet I'm still getting a whopping, 2 to 3% yield on a drawdown. So whatever, it could be worse. It could be charging me every day for it, but this has been a ridiculous trend since 2022. How about a 3 to 4 year downtrend in the CAD Swiss? Breaking all-time lows, new fresh all-time lows on the charts. Swiss just likes to do that type of stuff. CAD Yen, some resistance around 118 to 120. I don't feel comfortable calling that as a top. Risk-defined trades. Swiss Yen, even this thing can't get out of its own way. If you really want to see the yen get stronger, this is a pretty good looking setup. And I just think it has either a fantastic trade written all over it, or it has absolute fake out written all over it. And I don't know the answer. So probably safely for me is either taking defined risk or not even touching it. Euro Aussie. To be fair, I see a lot of structure down here. I kind of like Euro Aussie to the downside. If I were to buy small and buy small down here, stop loss below, look to see if this thing will bounce off of that structure. I could see that trade. I wouldn't want to see price going too much lower than 6,000. That's kind of my mental stop would be about 159 to 158.50. Because if it holds, look at all these turns. These are aggressive turns right around that 6,000 handle. So, if I was to take a small position here and also buy at a 6,000 low, stop loss kind of a 5,800, 5,850, that's not a bad trade. If we go up from here, great. I think this thing has upside of maybe 66 to 6,800, which could be a 500 to 600 pip move. It'd be fairly tight risk for adequate reward. The way I kind of scale into it, I trade it pretty small, but try to stack in a couple of trades and, maybe grab 1,000 pips or more. Euro CAD, I don't think this is too exciting. No, it's pretty choppy. Euro Swiss, kind of the same as the other ones. We've been in a multi-year downtrend. The funny part is this goes back to 2018. This downtrend has been since the great recovery of the Swiss National Bank debacle in 2015. This thing's still in a massive downtrend. Now, there's an outer trend line. If we put in a convincing or a believable and confirmed bottoming pattern, could this be a cup and handle? I'd love it to be. Could it be a 5-way move to the upside? I'd love it to be. Could we get back to parity again? I'd love it. I just don't know if we're going to. So, have we taken out the low at 9,000? Not yet. If we can break above this cluster moving averages, this would look a lot better for a 3rd wave move and then get a 5th wave move. Get the heck out of this thing. Maybe parity is great. Maybe just under parity is totally fine. My break even on the trade's like 90, 94. So I've just been kind of hanging out here, patient, and just kind of scaling in. Euro pounds, that's a robot trade. That's super small. Euro yen, that's a big maybe. Here's really good structure lows. I could see it being either one. We maybe have a structure break where it's high, low, lower, high, lower, low. Maybe something like this to bounce off resistance, and then that could possibly offer more support. What I don't know about Japanese yen intervention is, are they going to intervene and then get out of the way and let structure forces and market forces, resume the risk appetite and the carry trade? Or are we talking like major intervention? That it's so hard to trade that. So I don't know. I don't feel comfortable in the yen crosses. Euro New Zealand, a little bit different structure than Euro Aussie. I think Euro Aussie is a better position. Euro New Zealand, maybe down here, looking to see if it bounces. So if it's going to come down to the same low, tight stop loss, smaller time frame, look for some pop off of that like 9,600 handle. Kind of like that area. Euro dollar, dollar index, I still think is a huge range. I don't have a direction. I think that the trade that maybe nobody's watching is the dollar breaks higher and goes to 104, 105. Nobody's in that trade. That would make me think that the euro dollar would break down to go lower if that is the case. I just don't know if the dollar index and the dollar in general, if the dollar is getting stronger, is that tied to risk off trading? I don't know yet. So, this kind of structure, there's resistance. Could this be support? I mean, I'm not saying I'm selling the euro dollar from 118 all the way down to freaking 96. But even if I get a trade where this is a swing, high, low, lower, low, we push this thing back into this structure, which is around 112. I don't mind that trade for 400 pips. It's not a bad trade. I mean, swing trade, maybe even selling the highs again. So trade 1, trade 2, stop loss above like 122-ish and see if that works out. That would be like, buying the support lows on DXY and seeing if it will hold. Okay, I'll get to gold and silver and oil and stuff. Hang on. I'm almost there. Euro dollar, let's keep going. Euro dollar. Let's go to our pound crosses. Where are my currencies at? Euro dollar. Let's go pound Aussie. Pound Aussie. I think Euro Aussie is a better trade. Pound Aussie is a little slippery. Pound CAD, total garbage unless you're trading the range. Great range trade. Buy low, sell high. This thing is a great range trade. So if it comes down towards 8,000-ish, 8,100, 8,000, looking for a smaller time frame bounce, that could be right back in the middle of this range to 84, 8,500. That's a pretty good trade. Low risk, high reward. Pound Swiss. I'm still long in this thing like a fool. I'd love to see it break and actually have some open space to the upside. If it breaks above, I like it. There's a big inefficiency up here, coming back to like 112, 114. If this is a head and shoulders pattern, it's sure taking a sweet time, but I will wait. I'll be patient. Pound yen hasn't broken any major trend line. We're actually still making higher lows here, higher lows and higher highs. This could still just chop around here longer and longer and longer. I would say this though. If this structure breaks, this could be an excellent trade in the pound yen with very, very tight stop losses. If we break and flag and break and flag and break and flag, we could have hundreds and hundreds of pips on this thing with confirmation. But I've got to see it. I've got to see confirmation in the end crosses. Pound New Zealand, I'd say out of that one. Pound dollar, still pretty messy. I think the euro dollar is a cleaner trade. If the dollar breaks higher, if DXY breaks higher, this is probably breaking structure and heading down, maybe back to 3,000 or so. But euro dollar to me is a little bit cleaner. New Zealand CAD, I'm just still scaling in. I'm taking up the yellow box higher around 8,300. New Zealand Swiss, I'm still in, looking to see if we get some open space above the 200-day moving average. New Zealand yen, no trade. New Zealand dollar. I bailed on this trade. I was long New Zealand dollar, and I was long in here. I took some profit at the high. I got back in and started dollar cost average back in for another swing higher. Now that I see okay, dollar index, maybe it's off, I don't know. I bailed. So I'm not going to do anything on New Zealand dollar. I may buy it again at these lows. I may buy the New Zealand dollar again at these lows. And that's it. And just stay out of the noise. But price has to come to me. Dollar CAD is up. I think I grabbed a profit here recently on dollar CAD that paid out a couple of pips. That was fine. And I think that was it was like a 2-to-1. I was risking 60 pips to make 120 or something. It was off these 3,600 lows that worked out pretty well. Dollar Swiss, I'm still long. Another one, you can see a pretty good looking neckline. If this is a head and shoulders, inverse head and shoulders, left shoulder, head to neckline, just taking some time on the right shoulder. If we break above this level, which is around 80-50 or so, I'd love to see a symmetry trade and then a fifth wave. So 1, 2, let's say 3, 4, 5. Inefficiencies back here. I mean, I'm trying to take the dollar Swiss back to 84 to 8,600. I'm still prepared to, buy this thing at lows if I need to. I'm still prepared to buy this thing lower if I need to, just because it is positive swap. But right now, this structure, I'm watching carefully to see if we have a head and shoulders. If we break out, I'm looking for a 3 and 5 wave move with positive swap. Dollar yen, your guess is as good as mine. Maybe some intervention around the 160 handle, 162 handle like we've seen in the past. I mean, look at my chart, though. It's just a channel. Would anyone be super surprised to see the market run up here and poke these highs and then come back down? I don't think anybody would be shocked to see that. Would be more surprising if we break the structure and actually continue to go lower. It's going to take a lot to see that happen. Okay. Honestly, what wouldn't surprise me on dollar yen is we just keep doing this and 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 keep doing this. And then all of a sudden nobody's watching. Then all of a sudden it's like, oh crap, dollar yen's way out here. And then we have a pullback and then it's gone. And we're back down to these lows. That wouldn't surprise me. Now, is that yen intervention? Maybe. What was this? Okay. You have to remember what's crazy about this move that I circled. This was a 2 to 3 week window in the stock market. And we had a 10% correction in the stock market, and the currencies went about 2,000 pips in a matter of weeks. That was July to August 2024. Okay. So it can happen, and it can happen very fast. But we had a correction in the stock market, and guess what it did after that? It went to all-time highs. So even if this does happen in the Japanese yen, I don't know if it has any real correlation or damage into the stock market outside of maybe a painful pullback that, the dip gets bought. So I don't know. I don't sit around waiting for the Japanese yen because it's such a difficult currency pair. Okay. All right. Let me check the 1 month correlation really quickly. We're trading at 11.5. If you use a couple things that just help me, Euro, yeah, I did EuroCAD. I did. It's a range. Pound CAD's a range. I literally did all 20, 27, 20 currency pairs. Let me get to this core one. So what this is 1 month correlation in the S&P. And when this gets to 8, I tend to look for the market pullback. So we had a couple of pokes in here. We're trading 11.5. We're not quite there yet. Today's the VIX expiration. Today's NVIDIA earnings after market. So far, May has been a bit of a push and follow through April's big surge. But here's a couple things I'm watching. The one thing I don't love is right now, the market's been making higher highs with market breadth not correlating with it. So one thing I'm concerned with is we're at all-time highs in the S&P and the Nasdaq. We've had that huge run from the March lows, but market breadth is not improving. So in the S&P 500, we still have over 50% of stocks below the 50-day moving average, right? If you've been reading anything about earnings, I think Stockbox will show you that we had like 70 to 80% of all earnings in this season, this quarter, were positive in beats, which is great. The problem is most of the big beats and most of the big movements and most of the market cap is weighted in very few stocks. Semiconductors and Mag 7 large cap tech, that's pretty much it. That's where all the gains and margins really are. Yes, most have beat expectations. Revisions are going higher. But when we see all-time highs in the markets with market breadth not participating in that, I do have a bit of a concern that we're going to have some pauses or pullbacks. If you look at the chart, that looks like this, straight up off of March's lows all the way into April, one of the best Aprils we've seen in 10, 15, 20 years. It wouldn't surprise me to see the market go sideways. Could have pulled back a little bit? Sure. Could have pulled back a lot? Maybe. But I just think to chase this higher it's tough, man. It's just tough. So, all right. Anyway, that's market breadth. We are also right around the 50-50 mark for the 200-day moving average. Nasdaq, a little bit better. I'm not terribly impressive though. 55% of Nasdaq stocks above the 50-day and about 53% above the 200-day. So Nasdaq is holding up a little bit better than the overall broader market. Let's see here. Costco, geez, man, big surge off those lows. Wow. Nike, I'm still owning some Nike. I got some ratio spread in there. Home Depot had a pretty good couple of days here on earnings. Lowe's had earnings today. There's a lot of volatility there as well. I mean, we've seen a lot of movement in earnings. I grabbed a winner today on Target. Let me see what Target's at. Oh my gosh, dang it. That trade would be really nice. Target is right back where I centered my trade this morning. Son of a biscuit. That'd be up 100%. I got in for a 44-cent debit. Now it's up 60 cents or 55 cents. That'd be a nice little 110, 150% winner. I grabbed about 60% on the trade earlier, but anyway, good stuff. MasterCard, interesting spot. I mean, MasterCard on the daily has pulled back about 15 to 20%. We're down about 19% on MasterCard. The consumer is being stretched. The consumer isn't broken, but they're being stretched. Amex, same thing. Borrowing costs are higher. Johnson & Johnson, Progressive. I have some trades all the way down here. This is in Pulver Alerts, by the way. 150 by 140, another $300 there. Chubb took some profit on this one for insurance. Palantir cooled off a little bit. It's hard for me to justify wanting to get back in. This is what I did take some profit on Palantir with a bunch of income trades last year. HIMS, huge disappointing. This thing's down. At one point, it's down 80% from peak, like all-time highs. That's embarrassing. But Carvana, Carvana looks like a freaking head and shoulders in the making, right? Like this is the right shoulder that's starting to show moving back to the neckline. Be careful on that. Here is Salesforce. This is the SaaS again type stuff. I don't know if I want to touch Salesforce. O'Reilly, and we get into sectors. One thing I'm actually interested in, take a look at some of these sector things. I'll talk gold and silver in a moment. NVIDIA will determine the move of the SPY. I mean, it will. It's such a big company that we're probably going to see like a quarter to half 1% move on the SPY all by itself just because of NVIDIA. I mean, I'm telling you, though, be careful. And the reason I say that is because if you look not too far in the distant past, I remember this day very vividly because NVIDIA saved the day, and then it didn't. And that was this candle right here. The market on NVIDIA day, let me see if it was the, where the heck was it? This would have been November? Where's that November candle? Oh my gosh. There's October. Why am I not getting my, let me check the SPX. It's a little bit easier to read on SPX. That's December. Am I like, oh, I'm way the hell off. Duh. Here we go. It's this not too distant past. NVIDIA saves the day. Here's where price is trading. NVIDIA has earnings. The market's up 1.5%. Everyone's freaking pumped. NVIDIA saves the day. Awesome earnings. And the daily price action proceeds to sell off 3% to finish the day at negative 1.5. We had like a 2.5 to 3 standard deviation move that day, single day sell off. But the crazy part is, look what happened the next 1 to 2 days, right? 1, 2, 3 days, that entire move was taken back. So NVIDIA, there's a lot riding on it. There's a lot of volatility riding on it. The key is what happens on Thursday with price action. What happens on Thursday, Friday to finish out this week? Yes, NVIDIA has earnings. Everyone's paying attention to it. It's one of the biggest reports in the world. But price action Thursday, Friday will really determine if we have something actionable. I'm hoping that my little calendar spread works out well and I can make a couple $100 great. But I will also see that from this ridiculous run from March's lows into now, NVIDIA could save the day again, right? Save the day again, test these highs and fail all over again. If you look at past reports of earnings on NVIDIA, it typically like closes higher, opens higher and sells off. It's like the market loves to see like, yep, it beat earnings, but it's not blowing earnings away. It's a $5.4 trillion company. It's hard to keep beating the law of large numbers when you get that big. Okay. All right. Let's talk a little bit more gold and silver. I still think that gold can come lower. I've said that before. I actually that would not scare me whatsoever. That wouldn't even make me nervous. High, low, lower, high, lower, low, lower, high, lower, low. I kind of love to see that structure play out. Would it be fun for traders that are super long gold and trying to get into, this is the anti-inflation play, this is the anti-fiat play. Look, you're going to shake up all the loose hands and you're just going to be left with institutional buying down here at 4,000 or 3,500. I want to be the institutional buyer. I'm just going to get bid and bid and bid and just keep scooping up more. Okay. If I'm wrong and it never comes back to 4,000, fine. I just have a bunch of options down here that'll expire for profit. But it wouldn't surprise me to see this structure play out like that. So even if we head higher, okay. But if this is resistance and accurate resistance, comes right back down. I'd almost rather see the loose hands get shaken out and then see where the real buyers want to step in and buy this thing, under the 200-day moving average. It's a great discount. The market might react off of that. Okay, fine. But I'd love to see if gold can get lower. I'd still plan to buy it. Silver. So I did post a trade. I'm doing a campaign trade on silver. I bought a deep in the money call on SLV and I'm selling a covered call against that. So it's a diagonal spread, but some people call it the poor man's covered call. I'm in the trade for like a $3,500 debit. That $3,500 could pay me like $500 or $600 profit if price is greater than $80. So if price is greater than 80 on SLV, not XAG, but SLV, sorry. So if we're greater than $80 on SLV, then I'm going to make about $5.65 a contract. Okay. This trade is out to like 2028. This trade expires in June of this year, like next month. So all I'm going to do is treat this like a little income trade. And I'm probably going to go, 2 contracts to my 1 contract so I can have this thing running open-ended. I'd like to see silver have a nice catch-up trade to the end of the year. Is it possible that silver revisits highs by the end of the year? I mean, if the AI trade is positive, I think silver has a chance. Copper is another thing that's probably still looking good. We're near all-time highs in copper. So I just think it's good volatility. Keep an eye on this good structure. You know, there's plenty of support down here on $65. If it even offers a pullback to that level, to me, that's a great spot to be looking to get long. That's what I'll be doing, in fact. And then a lot of my option trading, when this thing was way up here and way down, I sold a ton of puts all the way down here towards like $50, $45, $40. Lots and lots of puts. So I'm still sitting on a pretty sizable position in silver. Let me see if this is highlighted. Let's go into SLV. So I have a couple ways to trade it. I'm in CEF right now. CEF is up around about $6,000. I have GLD, which is down. Fine. It's a bunch of ratio spreads. I have some shares. I'm down a little bit on the shares, but mostly it is, and this is a brand new position. I took a ton of profit on gold, last fall, participated on the first pullback, took some profit again. I'm reestablishing a whole new core position on gold. So this is like a brand new, campaign trade for me on gold. The other one is PHYS. PHYS is a gold and silver spot trade. That's up about $3,000. Silver, like I said, I'm doing a little bit better. I'm about $38,000, and I'm trying to double that or triple that. Depends on if I get more aggressive on options. So I like silver, and I like gold. And I'm going to keep staying with them. They're going to be part of my portfolio allocation. Okay. All right. We'll see. Let me check Bitcoin really quickly. Let's check oil. Bitcoin, I mean, key level on the daily is getting above the 200-day moving average. Just hasn't happened yet. So if we get above the 200-day, I think we have some open space to run to maybe 100K. That is the big, like round number and line in the sand. If markets can get above 100K convincingly, like a 110, then I think this is a bull pattern. Let me zoom out. Okay. If we get above 100,000, then I think we put in a bullish pattern. Okay. My concern is that we come up to 100,000, we kiss resistance, and we fall all the way back down to where we started. And this is more of the range. This is more of the halvening. This is more of the crypto winter type thing. We might even go lower because this might be symmetry to a lower high and lower low, which puts me down to about 40K, even all the way down to 30K when nobody's interested in crypto, right? And that's a lot of volatility. It might take a while to have that happen, but when very few traders are going to be interested in crypto, I think that's when the trade is going to be great. So I think we'd be lucky this year to see the markets go back to all-time highs in crypto. But I'm still prepared mentally for like a bigger drawdown, maybe come back to like 40 or 30K. Then we look for the crazy upside. Look for the 3x run to get back to like 120 to 130. Right? We'll see. All right. What else do you want to take a look at? So let's nerd out a little bit on NVIDIA while I got you here. NVIDIA. So the market is pricing in. I had a 236 to 212 range. NVIDIA, according to earnings, about a 5% average move. You can see here that it does vary. I mean, you've got a 5% or 5.73, 5.66, 6.72, 8.11, 10%, 10%, 9%, 14%. It clearly can jump on high volatility. Okay. The trade that I am taking, I put it in here. This is the trade that I have. So this is what it looks like right now. Not that exciting, but coming into opening bell tomorrow, if price is somewhat in a range for me, then I can probably grab a couple of dollars. But if it's like blowout earnings NVIDIA and it's, up $20, then yeah, I'm going to lose $40. But I'll sit on it until Friday and see if the market reverts. Because usually with a stock this big, one of the top, other than the SPY, it's like NVIDIA and Tesla probably have some of the highest options every single week as any other instrument in the world. So we'll see. And one of the big, I mean, it's so hard to think that, okay, if everybody's watching NVIDIA and everybody's in NVIDIA, I don't really think the market's going to reward a lot of direction. That's just my thoughts. So I'd kind of like to see like a big fake out trade where it's like, it gaps up and then fades back down, or falls and buys back up and gets a bid, gets a bid right away. I'm hoping it just ends up being like a pretty neutral position. Okay. All right. So mag stuff, mag 7. I mean, I think a pullback is needed. Same thing on semiconductors. I think a pullback is needed. How are you trading it? I trade SMH. I trade, which is heavily weighted on NVIDIA, by the way. I trade SOXX. I mean, these just need to cool off. Okay. I mean, these are crazy. Micron, crazy. SanDisk, crazy. Western Digital, insane. Like, these are all high flyers. I think they need to cool off. The MTUM trade, the momentum trade, this is a basket that rotates with all the high flyers. It needs to cool off. Okay. So some sector stuff. This is boring. Okay. But to me, this just happened like the last 4 days. Oh shit. That's actually looking pretty good. Let me see here. Materials. I mean, I kind of want to get long materials. That's a 46. Let me see what this pays if I do like a 42 by, I don't know. This could be an interesting ratio spread. I'm going to go 42 by 40. Let's go XLB. Let me do one thing here. I'm going to put a chart up. All right, we're at 20. I just need to see if my SPX will stay below 30 today. That is the key level. So our 425 pin, you dirty dog. Hopefully we're going to settle somewhere in between these strikes. That would be ideal. All right. Let's see here. So I want to look at so 46 or even longer out would be like a 42. XLB 42. Nick's coming on here. What's up, dude?
Hey, Chris, how are you?
Good, man.
I was listening to your sector analysis, looking at materials.
Yeah. So so what I was gonna here's my thesis. I like the AI trade, but I like the picks and shovel aspect more so than I like the actual semiconductor high flyers. They had their fun. I didn't really participate in Chase, which, you know, some people that did, I'm sure you made a lot of money. Good for you. But now I'm going for more like the actual physical side, the scarcity side, the like I said, the picks and shovel side, which is where I think most of the money can be made from this point forward. It's a little bit lower beta, a little bit more boring, but industrials, materials, more into energy, more of the scarcity side, more of the bottleneck side. I mean, I think what's crazy is we have so much demand for everything compute, everything AI, that we're going to run into problems like we don't have the energy to do this stuff, you know? And that's my concern, is that we have bottlenecks and all of a sudden we have ridiculous amounts of volatility coming. I just don't want to be, you know, in something that's up 100% thinking it's going to keep going when maybe it does. But give me a pullback first before I'm starting to, you know, participate in semiconductors. Yeah, no, that makes sense. I'm the same way with the semis world. Of course, big news on the horizon with NVIDIA tonight. We'll see if you mentioned SMH heavily weighted towards NVIDIA. We'll see if it can deliver the goods. I saw something. Our team put together a little study on NVIDIA. 8 to 10%, I believe that's the expected earnings move. If that's off the top of my head, that's what I think I saw. Which depends on how far you go back. I'm getting like almost 6%, but that's back like 98 earnings prints. So you might have a little bit less history than me. Okay. Yeah, very interesting. Just seeing in terms of where that goes, because of course this rally in the market has been pretty much, you know, all centered around the AI trade. I saw something kind of interesting. You might find this interesting too. I was looking at some of our there's all sorts of different ways to look at market breadth, but I was looking at just what we have on our system, and it's pretty thinly traded. I mean, you have technology stocks holding in pretty well. Tech stocks have been monstrous for the last, you know, few months. But a lot of other areas and energy, tech and energy,
not been, energy and tech. That's really your two spots where things have been good. So point being, it's a narrow rally, and where that does draw some concern in my view is where it's narrow. You could make the case that the rest of the group is going to start to catch up. But I think maybe the more likely case is that the you know, stuff that's run really, really hot cools off. Yeah. And some of the stuff that has not run as much may not necessarily rip higher, but kind of do okay. So we'll see. The rotation trade would be, in my view, the more bullish scenario. I don't know if you remember this, Chris, but like, well, I'm sure you do, but a couple months ago when the market was like trading sideways like this, we were like almost frustrated by the fact that it was like tech stocks were actually moving lower during that time, but everything else was holding up okay. So you just saw the move sideways until we finally started getting some collective selling. And then now you've had this one directional upward move led mostly by tech and energy.
Yeah. Yeah, I mean, tech, energy, semiconductors drove that entire move. It was very narrow leadership to get that rally. Obviously, it's nice that it happened because that just kind of made the market have a big sigh of relief. Like, oh, okay, this isn't a. I wonder what this 10% decline is going to look like. Is it 10 becomes 15, 10 becomes 20? Instead, we have a crazy rally, and now it's like, well, we could pull back and still have a pretty good bull-looking market. I mean, if we pull back to, I mean, you got the fibs right there, Nick. If we pulled back to 7,300, 7,200. That's a nice little fib, 38% area. The past resistance is 7,000. Nice little resistance area to come support. I could see that being a decent dip. I mean, if the market finds equilibrium, pulling back 50%, we're kind of cracking 7,000.
It's about an 8% pullback.
Yeah. So I could see. So here's what I would think percentage wise. I could see like 5 to 8% S&P. I could see about maybe like 8 to 12% Nasdaq.
Mm-hmm.
So, I mean, 12% puts us right around that previous all-time high. Further than that, I mean, we can obviously stack up things like the wall of worry, like, well, we've got 10-year yields rising, 30-year yields rising. We've got global yields rising. We've got inflation higher with 2 hot prints last week, blah, blah, blah. Does the market care? I mean, part of me thinks right now, if are you doing anything on TLT? I saw you were still short TLT. Are you still short? Are you trailing?
Yes, I am. So okay. I bought puts on TLT, which I don't usually make like directional bets through options, but I like the setup, and I felt like, I felt at the moment that I took the trade that the market was sort of ignoring what was, producer price index from both US and Japan came in way higher than expected. Mm-hmm. And then the next day kind of TLT dropped and then bounced. And then I sold that bounce. I was like, okay, yeah, I'm going to buy puts on this. And it's a defined risk trade. Again, that's the nice side of buying options, which I do rarely, but when you do it, it's nice. It's like, okay, this thing could fly higher and I still only, have my defined risk position. But anyways, bought the puts. Market it's been a really good trade so far. Obviously, you're getting a sharp bounce here today on uncertainties around whether or not the war will come to an end. Market seems a little bit optimistic today. You've got NAS, S&P higher. But yeah, I mean, to me, Chris, the pain or the max pain is still more higher yields. I know that sounds like the doom or boom or doomsday stuff, but I think yields, that was a tangible breakout we saw. And I got in there and I basically bought that retest intraday on TBT. I played TBT longs and TLT puts.
Nice. I mean, dude, good play. And I mean, when you're talking US 10-year, you seeing, I mean, you're just going to kind of ride this and see how high it goes. I mean, 5%, I feel like that's a big problem area for the market. 4.6 was, that was, what's his name is, Fudge. Mike somebody from Morgan Stanley. Anyway, I catch him on a bunch of podcasts. I should remember his name. But he said like 4.6 is a watch point. Like that's a caution zone. 5%, we're probably talking something a little nastier, uglier, more ominous happening in the equities market.
Yeah. So here's the TLT position. Basically, if we close today, or basically if we keep ripping from here, I'm just going to take the profits that I've got sitting on this position and just move out of the trade. I've caught that breakdown in TLT. TBT is the other one that I am long with a stop loss here below this kind of gap open. If this starts to get filled, I'm not married to the trade. I'm not, going down with it. I'm just going to take what I got. So if it does hold today though, and bond yields keep ripping higher, which Chris, how they can be, right? Yields can just go in one direction for like 3 months straight if they want to.
Right.
They may not. I'm just trailing a stop on this, and it's fairly tight. Like I'm not going to give back all my profits on this. If it rolls over, my thesis was right, but it didn't follow through. And that happens more often than not with my style of trading. It's just the reality of it.
Yeah. No, that's good. What was your kind of digestion last week with CPI and PPI? I mean, it comes in hot. Is it like, is the market going to get ahead of itself and think like, oh, the Fed's changing policy and they're going to start hiking rates? I mean, I see one potential hike by like January 2027. That's it. That's all I see. That's all I see in the forecast right now. So, I mean, I think the hard part is it may not be the equities market testing Kevin Warsh. It might be the freaking bond market testing Kevin Warsh. You know?
Yeah. Yeah. No, I think that's kind of the thesis for me is like, okay, this jump in producer price index was meaningful, right? And it wasn't just in the US, it was Japan too. And then, you know, I bring up Japan as a very important catalyst here because we've talked about it for years. You know, the BOJ, the JGBs, right? The government bonds for Japan, you know, yields blowing out over there is a problem for everywhere else. We're seeing yield float higher globally. And so that's kind of a trend that I'm trying to ride there. Of course, you know, with anything, I'm going to cut the trade if the technicals start to disagree with it. But yeah, I mean, I have a harder time with buying indices here, Chris, even than like the last few months. I've definitely shifted. This inflation is no joke when it starts. And, you know, it depends what happens, obviously, with the Middle East. That is you know, you're getting, again, headlines back and forth. Oil's down 6% today, but it could easily be back up tomorrow by 6%. These things are so, you know, back and forth whipsaw. And despite everything that we've seen, Chris, all these headlines about ceasefire and it's over. I mean, it's still around $100 a barrel. Like it's still sitting there.
I know.
And so that is inflationary. So I feel, you know, it's a bit of a doomsday take. I understand that, but you know, I'm playing it and trying to just trail stops and manage risk.
That's fair. What else you liking, man?
Let's see. Someone asked me yesterday, and I want to get your thoughts. I like gold and silver from the long-term perspective, but I'm in no rush. I think this is my personal take, not financial advice. I feel like sitting here and dollar cost averaging over the longer term starts to become attractive, but I'm in no rush. I'm not thinking like gold has, you know, 10%, 15% upside in the next 2 months. I'm not there. And you know, in this environment, I felt really bullish. I felt like even buying minor pullbacks made sense because you had inflation falling, you had rates falling, everything kind of aligned for the story for gold. And I think Kevin Warsh, as you pointed out, if there is, and you've called that for a couple months now, if there is a test from the bond market issuance, you know, with yields flying higher, that's not an environment that gold initially does well. And if it stays the case where people are fearful around governments, et cetera, yeah, maybe gold still has that long-term attractiveness. I think it does. It's just different. I think in the short term, I don't see gold as, you know, rip your face off rally. And hopefully I'm wrong because I like it for the long term and have some. What do you think?
I mean, I don't think you can sway me on gold or silver. I'm going to stay long in both. I'm just trying to stay patient in both because, you know, the chase and the retail speculation was, I mean, we talked about it for weeks on end, and it's the only thing that anyone want to talk about. It was exciting, and now it's not. And so now it's back to like, okay, well, now what's a real investor going to do on gold and silver? I'm going to start allocating again to start playing the longer game. But, you know, I'm starting to be a little bit more aggressive when it's like a little, you know, like a diagonal spread for me where I'm buying the, you know, 2028 call and I'm going to sell against it every 40 to 60 days. I'm going to use it as an income thing. I think that, you know, there's some upside trajectory. I mean, the fact that we had a peak on spot price at 110 on silver, we're trading at $65 right now. I mean, yeah, if it pulls back some more, fine. If it rips up and tries to retest all-time highs by the end of the year, great. I'm just going to let it work. So yeah, I mean, I kind of put Bitcoin in that same camp. It's like Bitcoin's going to be an interesting end of the year trade, especially if we're still running hot on, you know, AI and Bitcoin catches a bid. I still have my concerns about the technicals of Bitcoin. I think that if we don't break that 200-day or we fail off of that 100K resistance, that we end up selling off again.
I was going to say, Chris, you called that the last time we talked about Bitcoin. You pointed out, like, be careful with that 200-day right ahead.
Yep.
You know, I at that time was looking at Bitcoin long ideas. I never took any positions. I missed it just slightly. But I mean, look where it topped out right there at that 200-day moving average.
Yep.
It's kind of beautiful how the technicals held there.
Yeah. And we'll see. I mean, and so to be fair, like if it breaks above that, I mean, we clear the 200-day, break those highs at 83,000. I mean, it's pretty smooth sailing to probably 100K.
Yeah.
So Yeah, I mean that's not a bad spot for like a little open space grab. I just wouldn't be like holding long and diamond handing that thing. I feel like that's a run to 100K, maybe trailing some stops and something like that, or just kind of putting in like a little tester. But like I said, if we break above 100K convincingly, then I'm more thinking like we put in a decent low. Now we're breaking structure. Now it's time for the bulls to kind of find those pullbacks to buy the dip.
I think with crypto, this is just my take on it. Crypto is it seems to be most sensitive to what is happening in rates. Like it is so sensitive to borrowing rates, at least right now. Like if we look at 2022 was the painful really fast rise in rates, and we saw crypto get destroyed during that time. And then we kind of got the hopes and dreams of rate cuts coming back in. Bitcoin had a run up, and so maybe the other story here to watch for crypto, if you're watching on the macro side, would be some idea that they're not going to hike rates. I think Chris, how likely do you think the market is overstating or understating the risks about possible hikes going forward? I mean, I think you mentioned it. We're looking at maybe one hike coming down the pipeline. Do you think that's kind of like spot on? Do you think it's under or over? What do you think?
I mean, judging where we are price wise in indexes, I feel like we're underweighting a potential hike. If we hike the market, I don't know how the market's going to like it.
Yeah.
I mean, we priced in how many cuts? Like 6 cuts. I think we got 4. And now we're potentially we're raising again. So,
yeah.
Again, this is why I think the Fed probably wants to do absolutely nothing. Like things are shifting, but I think the Fed just almost wants to do absolutely nothing if possible. What they'd like to see is when we come into June that the CPI and PPI data cools off a little bit. We'd like to see that things are slowing down. Maybe we can have a resolution in this Strait of Hormuz stuff. We can get it back open, and the Fed doesn't have to make some crazy reactive decision to what's going on right now. But I think that's the unknown with Kevin Warsh is he going to be a reactive Fed chair, or is he going to kind of let the market powers like play out as is? And I mean, that's the scary part. Is I think what this does open up is it opens up the potential tail risk on either side. If the Fed doesn't hike, the market might just be like, great, awesome. The Fed's still accommodative, even though they're not cutting rates or anything, but it might be good enough. And the market just runs and runs on, better earnings and better margins. Because we still have like a stable kind of break-even labor market right now. It's not falling off a cliff. It's not drying up, but things are happening underneath. And I mean, you're probably seeing this on Edgefinder quite a bit, but I mean, we're reading a lot more about like the health of consumer. The spending is dying down a little bit. It's really the top 10%, 20% of spenders that are carrying the weight for all consumption. And on top of that, you've got delinquencies on the rise. You've got, like houses going in foreclosures or 30, 60, 90 days late on payments. You got the same thing on auto loans, student loans, same thing. It's like, these aren't unusual. Like this is always happening. But when consumers are pinched and like, I don't know, it's like, I will say this, the consumer is always resilient. They'll find ways to, I don't know, spend something or save something, stretch something. They'll pick up another job. They'll pick up a side hustle. Like people aren't stupid. I mean, it's not like, oh, I can't keep doing this. I mean, I don't know. People find a way to survive. And the bad part about the labor market is you don't track that stuff. The gig economy is not tracked in labor data, right?
Yeah.
And it's a huge part of the underbelly of our job market is really gigs. I mean, a lot of people have like a second, third hustle with a 1099 and they still work. And so even if their, current job is not paying them more necessarily, I mean, that's a W-2, but elsewhere they can be, a freelancer or a 1099 and they're kind of supplementing their income without having to ask for a raise. And therefore they keep their job, but they can, piecemeal some other stuff on top of it. So
yeah. And, I know it's not showing on this screen, but we do have like wage growth was a little bit softer than expected.
It was softer. Yeah.
You have, CPI, PPI. I mean, all of those things you mentioned, like credit card delinquencies, your savings rates getting hurt. I mean, one of the reasons inflation is so devastating to the consumer is whether you have a job or not, inflation hurts everybody. Sometimes, we talk about like, well, the jobs market also is important. People being employed is important. But inflation impacts everyone. Even people who do have jobs start to have to reel back on spending. If inflation rises suddenly and dramatically, it gets felt by the consumer on a broad level, right? If unemployment rises a little bit, yes, that is painful for especially the people who are getting those jobs lost. But if inflation rises even just a little bit, it impacts everyone instantly, right? It's
Right.
like an instant subtractor from economic activity. So it matters quite a bit. So inflation is another reason why I'm still kind of leaning towards the dollar bullish side of things. Rising yields, rising dollar or rising inflation readings. And then we did have the employment figure come in 115 versus 65 expected, but also to your point, ADP and jobless claims were softer than expected. So a bit of a mixed bag in terms of our latest round of jobs data. But let's also remember that 115,000 jobs added, even though that was a beat, that's still very low compared to the last few years. Like you still have kind of a quiet jobs market. I would say quiet over bad or good. I would just say quiet because it's not like falling off a bridge right now. But it could if something goes meaningfully worse. If inflation keeps rising, if oil prices, if we get a shock in oil prices, there is a reason. There is a real obvious reason as to why a lot of times when there are recessions in history, they coincide with a sharp rise in oil prices preceding them. It makes sense, right? Everyone's gas bill goes up by 50% and everyone stops spending money, companies lay people off, etc. So definitely something that I think is I would agree with you with the understating of the market in regards to, I mean, that's why I'm short bonds, right? Is the idea I'm thinking, well, inflation and interest rates, I think are being a little bit swept under the rug right now by markets. And maybe I'm wrong. Maybe the next round of data nullifies that idea. Maybe geopolitics nullify that idea in the next week or two. We get, oil come down real hard. If that happens, then yeah, I have to kind of adjust my thinking. But, I'm a trend follower, macro and price. So whatever's happening, I'm just going to kind of try and ride that. And I do think that right now, I have a harder time chasing indices up here. The more obvious trade for me, until proven wrong, is short bonds. So and long dollar. So we'll see if that can work out. So that's part of the reason why, again, long term I like gold. Short term I'm kind of like, well, if I think yields are moving higher and dollar's going to be strong, then I'm going to probably just be patient on gold and silver and be more on the accumulation bucket like you're talking about, not necessarily a short term trade, but buying them for, if we're listening to what's the guy, the main gold guy, the perma bull on gold, Schiff, yeah. He points out that he thinks if bond yields rise dramatically, it's actually just a super bullish thing for gold.
Everything's super bullish for him in gold.
Yes, everything, right?
Yeah.
But his case does kind of make sense. He's like, his case is contrary to what we talk about often. A sharp rise in inflation, a sharp rise in yields, we typically call that more of a bearish thing for gold. He points out that in the big picture, that's very bullish for gold if people truly lose faith in the system. And that's kind of always been.
There's no way to have gold as the ultimate outlier winner, though. If we have the shit's going to hit the fan, Nick, everything's going down.
Yes.
And the good thing is keep a perspective of what you want to buy when everything's on sale. Because there is going to be nowhere to hide when things get really bad.
Yes.
Trust me when I say that when you want to see a bear market, nothing's going to look good and nothing's going to go up. The only thing that's going to go up is an inverse ETF. So if this is what everyone's cheering for, is this you're going to fade AI, you're going to fade I mean, I get it, man. Like we have all sorts of weird correlations, and like I get yields are higher and inflation is sticky and gas prices suck and it's a huge increase in energy costs and now monthly yearly expenses for most consumers. But if everyone thinks that gold's going to be this like standalone island of like it's untouchable as the entire global economy falls apart, you're wrong. Like everything will fall and suck, but remember what you want to buy when it's all on sale and then you can come out ahead. But it's going to be a painful ride down, whatever it looks like.
That is really, really, really good points right there. That's wisdom that I'm telling everyone who's listening to this. You have to pause and internalize what was just said, because there's an expression in the tasty world they always say, I think is really good, which is correlations go to 1 in a market crash. Everything goes to 1.
Yep.
And if you are of the belief that you think everything is going to fall except your beloved Bitcoin's going to rise from the ashes and skyrocket, or you think everything's going to crash and gold is going to go straight to the moon, the hard news to hear is that when you have that market crash, I don't know if it's today, tomorrow, next month, next year, 10 years from now, I don't know, but rest assured that when you have massive grab for cash and liquidity and making and hedge funds needing to make themselves whole on all their margin, all their stuff, it doesn't matter in that moment if Bitcoin is the future or if gold is a safe haven, or it simply matters to massive financial systems to make themselves whole on margin that they have. They sell everything universally across their portfolio to raise cash and to raise margin in the scenario that you have a global, margin call essentially. And so, but to your point, Chris, that's great. It's like, understand now, if that environment happens tomorrow, if you are sitting on cash reserves, what, if anything, would you step out and buy in the chaos in that circumstance? I think it's a really good question to have, because in the moment it's gonna be hard to think about it. You're gonna be like, oh my gosh, everything's just going straight down. It's going.
It'll feel like crap, dude. It'll feel. I mean, look, if you traded through 2022, it'll feel like crap. But imagine, I'm just saying, worst case scenario. Imagine February to March of 2020 and prolong that for 12 months straight. That's how bad it's going to feel when you're like, nobody knows what's going on. The VIX is at 50 or 60. It won't go down. I mean, what is crazy to me is back in 2008, 2009 with the great financial crisis, VIX was like up to 80. And we saw the VIX come down from 80 to like 40. And yet we still made a fresh low in the markets. Yeah. That's very deceiving, because it's like everyone felt like that was the bottom. It wasn't. That was a decent fade of volatility, but we actually put in fresh lows like weeks after or even a couple months after. And that was the bottom, was like September 09. So, I mean, look, man, I'm just throwing it out there. Like I'm happy at like, hey, we get a 10, 15, 20% dip. If it occasionally happens, great. Those are usually good opportunities to buy. But when it gets really bad, and this might be like the AI bottlenecks and the CapEx bubble is so bad that we go into a straight up secular bear market, I'm talking about, dude, I'm going to be hopefully backing up the truck at like 50, 60, 70% discounts on individual stocks or freaking indexes. And I know that's insane to talk about, but if we ever see it again, we saw in 2000, we saw in 2008, it could certainly happen again if we're in like the late stages of these runs, and the valuations, the forward returns, all these things look pretty bad. But I say all this and remember that this is a financialized game that the whole world is incentivized to keep going higher. The wealth effect of markets falling 20, 30, 40% it's so much more painful than just kick the can down the road, create this new liquidity measurement, create this new tool, create this new lever, just keep pumping the markets full of money supply, liquidity, keep, being creative, however, whatever it takes, just like keep the party going. And that's why like this year, like if the Fed somehow takes away the punch bowl, becomes a little bit less accommodating, then yeah, it could be a bit of a problem. But it's not like the instant break the market. It's like, you got to break AI, dude. This is like a $90 trillion build out. You're not going to break AI in a drop of a hat. Like it's going to be, I don't know. It's going to be, I think the risk is still way more to the upside than we are talking like bear market now.
Yeah, no, I think that's fair. Chris, I put up a poll here. I think you can probably see it on the screen.
I can see it,
yeah. People in the chat, if you want to weigh in on this, help us out. Give us a 1 in the chat. You have to type just specifically just the number 1 or the number 2 for your vote to get counted by our software system here. If you want to weigh in on this, do you think that there will be a 40% plus crash? I should clarify, on the S&P 500, not the Nasdaq, not the Russell, the S&P 500. Do you think there will be a 40% plus crash in the next 5 years? That's a long time. 5 years in markets is a very long time. Do you think a 40% from the high crash is possible? So far, we got like 50, 60, 40 yes to no. So, Chris, what do you think? Do you think 40% is a big crash? That is a big crash. Do you think that's likely in the next 5 years?
Well, when you put the 100-year anniversary of the Great Depression, I'm going to say yes. I think somehow that's a weird anniversary to think about, but it's like somehow I can see the market. Yeah, you could have 2029, 100 years later, and what do you bring on? Another giant freaking collapse in the market.
Yeah.
Something like that. So yeah, 5 years, I'd say I'd put it down for like 30, 40, 50% corrections. I could see that.
And just for reference for everybody in the audience, if you've been trading for 6 years, 5 years, I also want to clarify that none of us in that time of trading, myself included, my entire time of trading, we have never seen, Chris, you have, but for people who have not traded 10 years or more, we have never seen S&P 500 down by 40. We got close during COVID, 35. We got kind of close.
I mean, we were 30 plus in 2022. We were 30 plus in 2020. We were 20 plus in 2025. I traded through the great financial crisis. I was just getting started during the .com bubble. I mean, I was not like, I had no idea what was going on in 2000. I was just, getting into college. So, I mean, look, if the weird part is this is what, the research is telling me this. This is such a narrow, heavy chase to AI and everything that is running and ripping and like, what's been creating all these gains are going to continue to do that it becomes so far like overextended and overbought that all it takes is for heavy profit taking or no more buying on that side of what's been driving us. And just like, there's essentially no floor. Like you just go up, 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 and you're in gravity space. And it just means gravity takes over. It just has a long ways to fall. So that's my concern to the upside risk, is that we get so far removed from like, Earth, that it's like, there's just nothing other than falling back to it. And that could be, 30, 40, 50%. And that's scary. It really is, but it's not right now. And, I would never be all in thinking that I'm gonna be exposed to it anyway, outside of, yeah, man, Nick will talk about a drawdown and we'll figure out how to manage it, but I'm going to have plenty of cash on the sidelines ready to deploy when I think it's appropriate. I mean, that's my job to survive that crap.
Yeah. I was going to say, I mean, it's a very interesting thought process. I mean, just to put that in context, guys, like I said, we have not seen that unless you've been trading back to 2009, 2008, we have not seen a 40+% crash. Now, I know a lot of people in the audience are like, well, let me introduce you to my friend Bitcoin, which in that case you have experienced that kind of crash.
Yeah.
But
seasoned pros now for Bitcoin holding.
Yes, but let me also offer you another scenario. Is most people who play around in Bitcoin, most people, not everyone, most people are probably sub 30, sub 35 years old. During 2008, people were seeing that kind of crash in their 401ks at 60 years old. That's different. That is devastating.
And that's funny you say that, Nick, because that is the same demographic of people that 20 years later they're still not in the markets.
Yeah.
Right.
Yeah.
Like it scared people that much where they're I'll never be in the markets again.
Yeah, stocks are a scam. That's the mindset for a lot of people that age. Guys, I've got one more poll here. We do have the Fed meeting minutes. I'm going to let this poll play out while we check in on this. Help us out on this second poll. We're going to stop that one. 60-40 roughly, guys. 66-35. Here's your next one. Give us an answer on this one. 1 or 2 in the chat. Do you think gold will crash down? I had to signify down because gold can crash up and down.
Right.
Gold will crash down 30+% in the next 5 years. I'm very curious.
Are you saying 30% from current? Because we already crashed 27% from the recent all-time highs. So you're saying like another 30% lower?
Let's say another 30%. Okay, that's a great question.
Puts us down. I mean, let's see what that peak to trough is then. That would be
3,050.
You'd be talking like a 40+% drawdown from the recent all-time highs then.
Yes. So from here, from current levels, do you think in the next 5 years, we will have some kind of 30+% crash in gold? Real quick, I'm just going to check while you guys do that, see if there's any motion here in terms of meeting minutes here coming out. Chris, if you want to check some headlines for me too, just to see if we got anything. Headlines.
All right. Any summary? I'll look for it right now.
Yep. Smaller number of participants judged it would be appropriate to lower the Fed funds rate on clear indications that disinflation was back on track. Participants generally judged that continued elevated inflation and uncertainty over the Middle East would necessitate keeping the current policy stance for longer than anticipated.
Yep.
Majority,
and then
go ahead.
Yeah, no, you have the persistently above 2%. Majority of participants said some policy firming would likely become appropriate if inflation were to continue running persistently above 2%. I mean, the Fed's arbitrary target of 2% is like effing stupid. We're never going to get back to 2%. If the Fed was like, we will do everything we can to get back to 2% inflation, they're going to kill growth in the economy.
Yeah.
We'll never like we won't go back to it if we want to grow. If we want to grow out of these deficits, and I'm not saying we're going to solve the deficits. I mean, what is it? Is it Ferguson's law? I just read about this the other day. Ferguson's law is when you have foreign ownership of your debt over 25%. We're at like 31 to 35% in the U.S. right now. Like these are never good. These are never good signs for the debting nation. Anyway, but 2% is just. I don't know why it's been the target until look, now people care about inflation. Nobody gave a crap about inflation for the longest time because 2% inflation, nobody cared, right? Now we care because it's 4. It's been running higher and hotter for the last 4, 5, 6 years now. We have had persistently higher inflation, way more than what we're being told. I mean, goods inflation. I mean, this is why the Fed has core inflation, because they're like, we can't contain food prices and energy prices, so therefore here's our core inflation. And it's, heavily weighted on shelter, which is always lagging. So anyway, just 2% seems so arbitrary. I mean, Powell, I know, was very strict on the 2% stuff for a while, but I mean, that guy is a Fed chair, dealt with all sorts of stuff. He also backstopped a lot of things. It's just an interesting time to be a new Fed chair, man. I don't envy Warsh coming into this. I think that Fed independence is a critical spot. I think you've got a whole panel and a whole membership that's going to try to maintain some type of independence legacy, while Warsh is like, hey, come on, guys. Like, I don't know what he's trying to come in and shake up or do. But if you're trying to take away forward guidance, the market's going to hate it. If you're trying to remove, I mean, did you see that Trump wanted to have companies not report earnings anymore? Instead of quarterly earnings, like remove that. And then Trump's also never going to be tested or questioned by the IRS ever again, or his family. I'm like, what are we living in, man? Like, this doesn't make any sense, dude. This amount of corruption and grift right in our freaking faces.
And there's blatant. Also there's a big thing too, Chris, which is the concept of reducing the Fed balance sheet.
Yeah.
Let's get back to the bonds conversation for a second. If you reduce, let me just finalize our poll here. So we have about 60-40 votes in regards to will gold crash 30% lower from here in the next 5 years. Interesting. So people in the audience are a little bit more trusting of gold than stocks, it feels like. So interesting take from everybody. Thank you to those who voted.
Yeah.
So anyways, Kevin Warsh, one of the things he wants to do, has talked about doing, is reducing the Fed's balance sheet, mentioning that he was a fan of doing it in the great financial crisis, but we kind of got addicted to the nice, stimulus from the Fed, kind of buying bonds, buying all sorts of different things. Wanting to reduce that is effectively a rate hike, because if you are reducing balance sheet stuff, that is the reverse of the Fed buying its own U.S. bonds. And so what happens to yields when there's a big buyer stepping away? They go higher. That is effectively a hike in central bank land. So, and what does that do, by the way, to gold? What does it do to stocks? It's not a good thing. This is, again, why I keep coming back to, I know I sound like a doomsdayer right now, but it is a serious contention point. You have inflation rising, global yields breaking out. Yes, there is exciting news about corporate earnings and the AI trade, but I still think, Chris, and I know I sound like a broken record here, but it's like the AI trade is also fueled by low borrowing rates. Like, let's not fool ourselves into thinking that it's not some new paradigm. New technologies have come and gone many times, but they need to be funded. And so when you have funding at the global level getting tighter, it does pose a serious risk. Look, I don't know the future. I could be wrong in my thinking here, but my thinking is, look at Japan, look at the US, look at the UK, look at all of the borrowing rates globally, screaming higher. And what does that do to stocks and gold historically? Usually it's not a great thing for them. I would say stocks more so than gold, because stocks, especially tech stocks, they're very heavy on the borrowing money in order to deploy that capital, invest in these new technologies. And so the other thing is when rates go higher and higher, the attractiveness, the competition to the dollar being allocated to stocks gets more challenged by, hey, well, I could park it and get 5%, or I could park it and get 6%, or whatever it goes to.
Right.
It's a real thing.
Speaking of, let me look. I'm gonna look right now. Let me look at some fixed income vehicles. I mean, I could do. I'm gonna look at like a box trade. I'm gonna look at the. Let me go log into my Schwab
give
here. I'm
you
gonna look at bonds, CDs, and fixed income, and just see what either money market funds or
Yep.
let me see if they'll actually show this or I have to log in. I'll probably have to log in. Yeah, I'll just log in. All right, give me like 30 seconds, dude. I'm gonna
All
log
good.
into this
Yeah,
and
I've
see
got the
what
screen.
I want to look at some of the big, like it's some of like the too big to fail ones where it's like, okay, what's a Goldman Sachs bond look like?
Right.
What's a Wells Fargo? What's a Bank of America? What's JP
Well,
Morgan?
and the other one, Chris, is like, just think for the average person, a money market fund starts to becoming a little bit more attractive. And as we've talked about, if inflation ticks up a little bit across the entire economy, that becomes a painful thing. Well, if savings accounts, if CDs, if money market accounts, if bonds become more and more attractive, and they're risk free, as opposed to people getting a little wobbly about the AI trade, to any capacity, that starts to become a competitor. And I also want to reiterate, I think AI is an unbelievable technology, and long term, I'm absolutely a believer in it. I feel that it is the internet all over again. But as we know with the story with the internet, people got over their skis with that, and there were a lot of painful downside moves when when stuff started falling apart. Granted, do I think that is right now? Do I think the stock market is going to crash tomorrow? I really don't. I really don't think so. I'm just pointing out that the risk reward, when yields are doing what they're doing, stocks are up at this high, valuations are back to very pricey levels. The economy's got some wobbly signs in it in regards to the macro that we study all the time. Inflation being the core problem there for me. I just look at this and I think, okay, risk reward wise, I'm just going to stay sidelined on stocks, at least at the index level. Maybe some individuals, maybe some dividend yielders, maybe some other stuff might be a little bit more attractive. But really, I think staying cash is perfectly fine right now, and I can excuse my missing of this rally by saying, well, hey, Warren Buffett did too, so I'm gonna sit out on just at least what's going on now. And maybe that is the wrong call. Someone else pointed out, Chris, that we had some comments recently about like the software trade is working pretty well, but even the software names, which I like, by the way, I'm not ignorant to the fact that, as you pointed out, if you do get some sharper downside moves, everything, including software, will see more pain. So I'm kind of just staying liquid. I'm staying cash heavy, and perfectly fine to do so in the here and now, because I just don't see an obvious bet that makes a lot of sense to me in stocks.
Yeah. IGV. So I'm always looking at the IGV compared to SMH right now to see if that's continuing to run with SMH outperforming.
Yeah.
It's caught a bit of a bid. Do you have any individual like in the I mean, I think like IGV has like 200 some holdings in it. I think that's how it's weighted. Anyway, but it's caught a decent bid. That's great. I would be out of that trade with profit and not trying to hold that thing longer. I think it's just like, it's a good little pump. Part of me thinks that if we get a dip, we're going to see all-time highs again. I mean, Ed Yardeni's calling for targets of 8,000 plus. Tom Lee still a 7,700 to 8,000, S&P by the end of the year type target. All the analysts and investment banks are calling for higher S&P, and makes sense. I'd love a dip in order to see that higher target. I'd love to see at least a pause or pullback that's somewhat organized. There's good structure in the market to maintain bullishness, but to just not pull back, it kind of bothers me. But it's like we look back. Let's say we don't get a pullback much more than just a couple percent, Nick. We'd look back and say, well, that's pretty much April to December of 2025, and now again it happened, March to, let's say, November, December 2026. I mean, it's like, well, you just have to line yourself up for the one time that Trump's going to take 3,700 trades. Try to time it. Anyway, so I'm showing the fixed income stuff here. So certificates of deposit, if you're going out 10-year, this is going to annualize at 4.5%, 4.55. Not bad for a, lock it in, chill, preservation of capital. The problem is, do I think that the inflation, I mean, I think that we're suppressing TIPS, which is your inflation, like it's your inflation rated bonds. I don't think people are getting the appropriate return on a TIPS bond. So if I'm at 4.5%, you can go here into some of the government agencies at 5+%. I wouldn't freaking trust that. AAA corporates, maybe. I'd want to see who I'm buying, obviously, to go 10-year out 4.86. But it's like you're talking like AA or single A corporate bonds over 5%. I would take a CD with a big bank. Let's go 10-year 4.55, and then look who's offering them. Okay. I don't
Yeah.
give a crap about Jonesboro State Bank. I don't give a crap about Celtic Bank Corp. It's like, I do not want some regional bank or some credit union. Give
Right,
me
go for the big
Goldman
guys.
Sachs. Give me a JP Morgan. Give me the big guys that are too big to fail. Look at all these, man. I mean, none of these banks are big names. These are all like regionals, or I don't like that at all. So
Here's
be
a
careful out
little
there.
here's a little price action for the room here. I'm looking at the dollar index, DXY, still holding strong today. Again, I'm watching my trades. I have kind of a proxy long in the dollar, at least recently, due to the correlation with my short bonds position, dollar bullish position. I don't have any dollar trades open, but they are moving pretty in tandem. So I'm watching the dollar here. Your 4-hour chart levels, you did break above the 99. We retested that. We retested it again today. I'm curious to see if it can continue to hold. Euro dollar has been seeing some downside move here. Little pop today. I'm very curious to see. I don't know if you remember this, Chris, but euro dollar was one of my better movers for me personally in 2022. Because if you remember, in 2022, it was like euro dollar was like the cleanest downward channel I've ever seen in Forex. It was just, every little rally sold into, every little rally sold into, flocking back into the dollar over and over and over. And then it hit parity. And I remember it was around when I was on my honeymoon. I remember watching euro dollar hit parity. I was like, this is incredible. We should have gone to Europe for our honeymoon. What are we doing? Yeah. And then it bottomed out. So, but granted, I'm very curious to see how some of these dollar crosses may change their behavior if we are going to see what I'm thinking, which is we've got higher inflation, yields are rising. I'm curious to see if that dollar trade is going to finally wake up. We've been in a range for the dollar index for a year plus, really gone nowhere.
Yep.
And I think markets start to get a little bit more interesting. We might finally see some of those pullbacks we've been looking for. If you start seeing that technical breakout on the dollar above 100.5, I think that those two things kind of can live together. Big breakout in the dollar, stocks could potentially pull back. And again, to your point earlier, be at the ready with, if you have something you're looking to buy, be prepared before you get a breakout in the dollar index for what could get hit in that environment. And of course, I could be wrong. Maybe dollar index rolls over, but my thesis right now is still thinking dollar to the upside. And then the bigger question mark I have is, can we actually break 100.5, which probably, by the way, coincides with gold back down to these lows. So if you're a longer term gold watcher, hey, there's your maybe some opportunity to look at that 200-day moving average and potentially establish positions there if that's something that you're looking at. But again, yeah, that's kind of my base case right now. My most convicted idea is thinking dollar index higher, yields higher. I think that inflation I think the inflation train is heading out of the station right now. And, maybe we'll hit a brick wall and stop the train. But I think more than likely the train is moving. And, that is a challenging circumstance for me. So I look at oil still sitting here, dollar moving higher. And I just think, okay, inflation seems to be on the rise for now.
Do you think we have a situation where stocks can still go to all-time highs with the dollar breaking above that 100 handle or 101 handle to have dollar rallying to 104, 105 while stocks still go to all-time highs?
If it happens, I think it's probably a rotation. I have a hard time thinking dollar breaks out and it's still tech just ripping higher. And maybe it is, but that would be, Chris, that would be one of the more slap in the face moments, kind of like late 2001. Not that I was trading at that time, but like when you had the just absolute pandemonium and upside in stocks where it just didn't quite even make sense. The valuations were so disconnected from the prices of the stocks. That would be as dynamic. If you have the dollar screaming higher, yield screaming higher, and tech stock screaming higher, my personal opinion would be that would be a market where I very much step to the side.
Yeah, that's a tough one. We've seen it in the past. I mean, the weird correlation is equities higher, gold higher, dollar higher. That's a tough one.
Yes, that is hard.
Something's bound to disconnect at some point. You can throw Bitcoin in there too, but Bitcoin's clearly been operating slightly on its own, while it really didn't participate in this the V bottom rally we saw this year so far. Yeah, I think it's going to be an interesting summer, man. I feel like it's going to be very choppy, very volatile. Pullbacks are certainly due on the technical side, so I just don't feel like I want to force anything. I'm still trading very safe. I've got a lot of trades in right now that are still way out of the money. Give myself plenty of wiggle room. Let the market be noisy. I've been doing way more short-term trading. Focusing in on like my 0DT trading and weekly trading and stuff. It's been working really well. I mean, honestly, I'm just kind of out there grinding every day, and that's fine. It's not easy. It's super, but I mean, I'd rather have it be like, all right, the challenge is I'm going to win the day. I can do that versus I need to know what's going to happen 6 months from now, 12 months from now. Like nobody has a clue.
Sure. Yeah, no, it makes sense. Chris, you've been on for a while. I'll let you head out of here. I don't want to keep you all day. Thanks for the commentary. We've got any other headlines hitting right now with anything else interesting from FOMC stuff?
I am not seeing any. We read like the top 3 headlines.
Yeah.
There's the minutes and stuff. You want to post that link? I don't really see much outside of. So what I'm looking at. So when we read the 3 headlines, I looked at the FedWatch tool, and right now December of this year is the only thing that shows a slight uptick in the histogram of the potential rate hike. So we might be looking at a December or a January 2027, as this is where it's like, okay, we're kind of neck and neck in either the pause or the hike. Would be like December, January this year. So it's, again, we all know this is going to change and this percentage will climb, month or month, whether CPI, PPI come in hotter. If worse starts to step up for these FOMC meeting minutes and things like that, or steps up for the press conferences, we'll see what the market takes, kind of the stance and approach market takes with maybe testing him. But honestly, like I said, I think it's not really the market testing worse. It's mostly the bond market, because you're stepping into the rate of change in bonds and yields has been pretty substantial the last 30 to 45 days. So it's certainly not a nothing. I mean, Mike Edwards, I think, is the guy I was thinking of with Morgan Stanley. 4.6 to 5% is like the crunch zone, where it's like things look a little bit tougher for equities if we're watching the 10-year above 4.6, which we are at. Our 30-year auction at 5+%. I mean, that's like some of the highest we've seen in 20, 30 years. So it's not nothing, man. But anyway, all subject to change. Keep an eye on the prize. Have some cash at the ready. Don't trade heavy. I'm sure there's going to be plenty of opportunities. Just make sure we can, have the money to buy them or have the money to go into them.
Gotta play. Be on the ready for ready position for whatever happens. So
yep, exactly. So all right, man. Well, thanks for having me in today, dude. It's fun.
Yeah, man. Good. We'll see you on the next one.
All right, thanks, Nick.
All right, guys, we're going to just keep it running here for just a few more minutes, and then I'm going to head out as well. Just going through a couple trade ideas that I'm looking at. I'm, like I said earlier, I'm still bullish on the dollar. Part of my bullishness on the dollar keeps me more on the bearish side of things like Bitcoin, which I am contemplating taking small stabs at being short. So I was looking at Bitcoin from a 4-hour chart perspective. If I draw my fibs here from swing high to swing low, I am kind of open to probably a pullback into this 38.2%. If you do see Bitcoin squeeze a little higher, that might be a small short position for me, looking for that side of things. Probably going to stay away from the indices. I mean, I have not really traded them for a while. Like I said, my more obvious play right now is to stick with the thesis of thinking yields could move higher. But I'm not married to the idea. Like I've got my thesis here. I think yields are likely to continue to stay on the rise. But if they aren't, then I'm going to take my profits on these trades. I mean, I caught this move here to here. If we are rolling over in yields, it seems like the catalyst for this move lower in yields today is, of course, geopolitics, right? If there is an end to the Iran situation, then yes, yields will probably move lower, as in response to that, inflation concerns may subside a little bit on falling oil prices. So we'll see. Nick, are you going to switch to bearish after war ends as DXY? So bearish on dollar as DXY was on its next leg down, I think, before the war happened, and the oil rally pushed inflation and yields up. So that's a great question. Let's look, as to what I am thinking on the dollar index. And, here's the thing about it. It's not really based on geopolitics. There is a factor, there's a piece of this that is going to be sensitive to geopolitics. I will express that here now. So here's my thought process, right? If you have Edge Finder, I'm using the scorecard page, which is looking at technicals, sentiment and COT data, and fundamental score. So if I'm looking at the dollar index, why do I think dollar has some upside? Well, first and foremost, the 4-hour and daily chart trend has been moving higher, right? We've got momentum, prices moving up and to the right for the dollar right now. So that's a bullish factor. Seasonality is a bullish factor here right now. The month of May is, historically speaking, in the last 10 years, a positive one for the dollar. So a little bit of historical pattern there, giving us another bullish reading. Institutional activity is sort of mixed. However, in the latest filing, check this out. They added a significant amount of dollar long on the futures contracts traded by the tracked by the CFTC's Commitment of Traders report. So big money seems to be moving in on the dollar. They've been chasing the rally higher. I think that's a positive. Economic growth is not so positive. We have GDP growth, which missed expectations, PMIs missed expectations, and retail sales kind of met expectations, giving us a neutral reading there. So that's not particularly positive for the dollar. But what about inflation? Well, inflation is a big one. And we had most notably a huge blowout in the producer price index number. Now, I know these sound like acronyms that might be like scary when you first hear them. You're like, what the heck is a CPI or a PPI report? What does that even mean? Just think of it high level as measurements of inflation. And when inflation is higher, central banks, in this case, we're talking about the US dollar, the Federal Reserve says, okay, we need to hike interest rates or hold them steady. We can't cut interest rates because if you cut interest rates, it could make inflation go even higher. Many of you guys might remember in like 2021 when everybody got a stimulus check and there was just money being printed like crazy by the Federal Reserve. Inflation went crazy in 2022. Remember when you went to the grocery store and it was a sticker shock every week? That is what happens when you cut interest rates very quickly into an economy that, it doesn't necessarily need that help. That can be very inflationary. And then we heard from Jerome Powell during that time, inflation's transitory. All of these little things you heard, they're massive trends that you can make a significant amount of money from if you capture them correctly in your trading. That's the whole point of using a software like this. We didn't spend, all the time and money to build these tools just for fun. These are tools to help us better gain insights on what's going on in the market. So inflation being on the rise is a tailwind for dollar strength. And so we also have the 2-year yield trending higher. That's a tailwind for dollar strength. So we have really strong readings for the dollar here. We have neutral on the jobs market data. We have strength in the Commitment of Traders report. We're tracking all of this to build a bias on the dollar. One thing you'll notice is that none of this is necessarily all about geopolitical stuff, except for one component, and that is any guess as to which factor here is based mostly on geopolitics? Well, kind of 2 of them. The big one, inflation, right? The other one, price. So if there's geopolitical headlines that come out and they're much more promising, something good happens in the Middle East, yeah, the dollar index is likely to respond negatively to the downside, right? And that would start to factor in. So yes, there is some geopolitical sensitivity within EdgeFinder's scoring mechanism because we're watching price, we're watching yields, we're watching inflation. These things are sensitive by their very nature to geopolitical headlines. So we don't even need to track the news. We don't need to stare at the news headlines, which are admittedly just very confusing and back and forth. Instead, we can just watch the data coming in our system to help us build a bias. So for now, I remain bullish the dollar. But if you've watched me for a while, then you've probably seen me be bullish on something in one video, and then 3 videos later, I'm bearish on it. I do my best, I'm not perfect at it, to try to remove my human bias to want to be bullish or bearish on something, and instead systematically look at what my tools and my data is telling me. So instead of, the headlines are scary today, I want to be long dollar and short stocks. And then, they look great today, I'm going to flip everything around. That can get you into some serious trouble. Having a screener like this, the whole point of having a screener like this is to have some sort of mechanical, systematic style to what we're doing. Right? Let's not stare at headlines 24/7. Let's not watch what Trump says one day and then, what Iran says the next day and then what Japan and China and all these different places. Like, you can do that, but you will probably drive yourself mad. Instead, I am a big fan, proponent, and purveyor of using tools to screen and track that stuff. That is, why we are in business. We build these tools. We have thousands of traders worldwide using our stuff for this very purpose. This is a good time. I just realized, I promise it wasn't intentional, to let you guys know about our Memorial Day sale that we're doing for now until Memorial Day is Monday. So it'll go through Tuesday. If you guys are interested in getting access to Edgefinder right now, it's currently 30% off. And for live stream viewers, that was hard to say, Memorial Day sale is actually going to be 35% off. So if you're interested in getting access to Edgefinder, or if you want to join our VIP group, there's your pitch, right? We got the pitch came your way, perfectly timed. You got it. I actually did not mean that for that to fall that smoothly, but I feel like that was pretty smooth. So thank you for listening to my pitch. But genuinely, I think the tools are worth every penny. If you are somebody who's trying to improve your macro fundamentals, I genuinely would not sell them if I didn't think they would genuinely help people on that mission, because I use it every single day for my own trading. And again, I'm not a fan of just pushing whatever in terms of our products. It's got to be something that I would use myself here in regards to our trading software tools. So yeah, thank you. A couple years experience, not gonna lie. I am an online grimy evil salesperson that sells software tools to traders. But I also genuinely think that they are worth every penny. So if you're trying to bring your fundamental analysis to the next level, click this link, chat with our support team. We have real people online. It's not robots. You can talk to a real person. Emily or Drew from our team can set you up with access to Edgefinder for that 35% off sale for Memorial Day. So there you go. Take advantage. Grab yourself a copy while you can. Last one to buy the Edgefinder is indeed a sausage. I believe that is a fact. So there you go. The real regulars can do the pitch on behalf of Nick. Yes, you probably can. You've got it down to a science, just like I do. I mean, I know it's for the regulars. You're like, I've heard that pitch 17,000 times. But it is an easy pitch. I think we build a really powerful tool that is important. Anyways, so that's my thesis on dollar. I think dollar can move higher. I think dollar moves to 100.5. And one thing that you'll hear consistently across the wonderful traders that come on here, like Tiger in the chat, or Alan, or Marco, Chris Pulver, Miko, Ivan, what you will hear, one of the things that I pick out in terms of, like, when we're thinking about adding a new creator to our stream hosts, I like when traders actually talk about what they are doing in the markets, not kind of this, we'll never share an opinion traders that you see all over social media. Like, a lot of times you're going to see people who they'll never give you an idea. I will tell you what I think is going to happen in the markets, and I will also follow up the next day and tell you, if I'm wrong, that I was wrong. I'm not telling you what to do with your account. I'm just telling you what I think is likely to happen based on the tools that I use. And I'm wrong often. At the end of the day, trading's not about being right all the time. It's about making it count when you are right. So again, going back to my current positions, straight up showing you what I am doing in the markets right now, I went long TBT, aka I also bought puts on TLT. Now, some of you guys are not options traders, perfectly fine. The other way to play this is basically dollar longs, right? It's moving very much in tandem with the dollar. TLT is a treasury bond ETF that I am essentially short on by buying puts. I bought 30-day out puts while I was on vacation by the pool. My wife said, Nick, why are you staring at your phone all day while we're at the pool? And I said, just checking the weather. It was perfectly sunny. But in reality, I was staring at TLT. And I bought puts on TLT because I felt that at the time we had CPI and PPI blowout for the US, higher PPI from Japan, and the market kind of shrugged. And I looked at that and I said, no, I think TLT is going to move lower. I think yields are going to trend higher. And I still, right now, as I say this, I think yields are going to keep moving higher. If I'm wrong, that's the very next question you have to ask yourself. Okay, Nick has this thesis. He thinks yields are moving higher. He's outlined that it is because of inflation moving higher, technicals on the dollar looking firm. I've also talked about how I think Kevin Warsh could be more hawkish than expected. All of these things, right? And then what's the very next thing that I ask myself? What am I going to do if I'm an idiot and I'm completely wrong about that idea? Because it's a very distinct possibility. What do you do when you're wrong? And so I've told you, like, first thing I did is I highlighted, okay, I'm going to get out for this amount of risk. What I like about buying puts or buying calls, and I don't do it that often because I tend to not love buying options. They are depreciating assets. So I typically do like to be more on the sell side, but I felt very directionally convicted to bet against TLT on this little bump after the CPI and after the PPI. I looked at that and I said, I think TLT is moving lower. So I had a defined risk. I know what I'm going to lose if I'm wrong. I know exactly what I'm going to lose to an exact figure with buying puts, because you're only in for what you buy in premium. So I spent, I bought 34 contracts at whatever I bought them at. I'm currently sitting on a profit of about $2,200. Granted, I've given back a chunk of the profits. I think this was up $4,500. So I've given up a bunch of the profits. And if it keeps moving higher, excuse me, if it keeps moving higher, then that's it. I cut the trade. If we're higher in yield, if yields come down tomorrow, if bonds move higher tomorrow, I'm just going to cut the trade, call it good, take my profits and run. But if we can hold here, then I'll continue to trail stops. I'll be looking for a break through the lows. If that happens, I'll trail my stop. If it doesn't, I'll take profits. That's it. So knowing at any time, what are you going to do with the trade that you have on, if it works and if it doesn't work, right? It's really important. Open your all portfolio, Nick. You want to see what's in my portfolio right now? I have not a lot, to be honest. If I just go stocks for a second, I have these stocks that have been sitting in my portfolio, a lot of them for a while. I have my options trade. I have my my IJR. I have my Indian stock ETF. I'm sitting in cash in SGov. And then I have TBT, which is another long, or it's a short ETF or short bonds ETF. So this moves inversely to bonds. So yeah, so that is pretty much everything right now. But again, I'm sitting on a good chunk of cash. So if the market does roll over, it's better, right? At least for my positioning. But anyways, guys, that's going to wrap up for the show. Like I mentioned earlier, don't miss it. We're currently doing our Memorial Day sale. It is 35% off for stream viewers on Edge Finder, Gold VIP membership, Stockbox, any of the following. If you are interested in setting that up, take advantage. Don't miss it. 35% off if you send a message using the link that just got dropped in the live stream chat. You can connect to a real person. We also, here's something to note as we close out. We offer payment plans for people who cannot afford the full amount, but don't want to miss the sale event. So if you want to take advantage of 35% off, but then split it up into a couple months, so that's a really small amount per month for you, you can do that. You just have to message in on our website. Speaking to a person from our team will set you up with that option. They can coordinate with you. They're able to do that so that it meets your budget criteria. I know some people are like, I can't pay the full amount. Totally cool. Our team is very good at setting up flexible plans for people with different current budgets. So with that said, guys, that's going to wrap up the stream. Thank you very much for being here. Thanks to everybody who streamed on the show today. We went 3 hours, 40 minutes, not too shabby. Shout out to all the other creators who came on today. With that said, guys, last thing I will say, you have NVIDIA earnings this evening. So stay tuned on that. We'll definitely be discussing what that does to tech stocks. The market definitely hinges on a couple key names, NVIDIA being one of them, and the semiconductor trade. So thank you guys. Thanks to everybody for hanging out with us today. Hope you have a wonderful rest of your day, and we'll see you back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.